This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Donald Trump needs a weak dollar.
I didn't hear too many bullish cases for China in 2025.
With Lisa Michele on markets.
The economic calendar jam-packed today.
And Michael Barr with news.
Trump took steps on everything from TikTok to the southern border.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Michael Barr, Lisa Mateo. Paul Sweeney downtown, second day. Bloomberg Invest with Sonali Bassick. Very successful yesterday with good conversation. Given the turmoil that we see in markets, Paul and Alex Steele will do it again at 10 a.m. Jess Menton in today on the equity markets. Jess, it's a lift, but I looked at it technically. Come on. It's just, It's not, don't give me this all clear Jess Menton stuff this morning.
Well, typically we've seen more of the buying in middle of the week this year, especially since Trump took office, because people don't want to go long into the weekend. So more of the pain's been on Mondays and Fridays. But the implied move today is 1.4%. So that'd be the highest implied move for the S&P 500 since the day after the election. Bond
people don't trade off the weekend. They don't go
That's correct.
long or short into or out of the weekend.
Equities traders too.
Bonds, adults, equities, the children of the brigade.
We have more fun than stocks.
Bob Michael with us with JPMorgan. We'll get to him here in a moment. Right now, we've got a lift to the market with the VIX on that 24 level and the 23.39. By no means do I see all clear, although I got Bitcoin rounded up 90,000. That gets your attention. Bloomberg surveillance this morning around the world. We're brought to you by IBKR. Will the U.S. CPI, will it exceed 2.4%? In March 2025 trade year prediction with IBKR forecast trader. The yes was recently at 60%, 60%. Buy yes or buy no and earn $1 if you're right. Go to ibkr.com/forecast. Across equities, bonds, currencies, commodities from the Interactive Broker Studios, the Bloomberg Business Flash. Lisa Mateo.
You got it. After a two-day sell-off, which actually saw the Dow race more than 1,300 points. Futures, well, we're advancing right now. We have NASDAQ futures up 0.5%, Dow futures up 0.3%, S&P futures up 0.4%. We go to the two-year yield, 3.95%. That's down about 3 basis points. The yield on the 10-year, 4.23%, and that is little change. European stocks climbing. Germany's plans to boost defense infrastructure spending. So you have the DAX in Germany up more than 3%. The Stock 600 up more than 1%. Looking at those defense stocks, we have Rheinmetall up 3% in Germany, Saab up 5%. We go to the euro right now. I want to check there, up about 0.6% at 106.91 against the dollar. The Bloomberg Dollar Spot Index down about 0.4%. Also, the Mexican peso up 0.1%. Canadian dollar, little changed. We have a rebound in Bitcoin. Tom mentioned it, just reaching above nearly 90,000, up about 2.5%. And after selling off yesterday, auto stocks on the rebound. You have Ford up 2%, General Motors up 4%, Stellantis is up 5%, even Tesla up 1%. And shares of chip makers, other companies tied to EI, they're on the rise. Nvidia, Broadcom, Micron, all up more than 1%. That is your Bloomberg Business Flash. Jess and Tom.
Lisa, thanks so much. We have a terrific set of conversations for you today after what we saw yesterday. I said to the fam last night, just when I got home, I said, you look at the wall of TV screens. And yesterday, looking at 9 screens, in all the years I've been doing this, there's only maybe 4 or 5 days.
Right.
As chaotic as yesterday.
How many screens do you use, Tom?
Newspapers I use 12, and screens I can't count. My eyes glaze over. Ira Jersey will be with us. Brian Belski, the Bull, will be with us. Ann Maletti for Too Short a Visit. Gata Makunda from Yale will be with us. And Terry Haines, off of what we witnessed last night. The Financial Times with a headline moments ago, the United States cuts off intelligence sharing with Ukraine. That is a key headline. We'll see how the markets react to that. For the next good amount of time, Bob Michael will join us. You know him from the Fed Decides, driving all of JPMorgan fixed income, huge advice he has to give to Mr. Diamond and the senior management. I'd go back to Maynard Keynes at Bretton Woods, but why not? Let's go back to the guy that really said it. Paul Samuelson, his iconic textbook of 1948. When the facts change, I change. What do you do, sir? For Bob Michael and JPMorgan, have the facts changed?
Well, first, Tom, thank you for reminding Jess, forget about this equity stuff. Bonds are at the top of the capital structure.
This is really important, folks. Bob and I are going to talk about this. The way you learn that bonds matter when you're a mouthy equity guy like me is you lose money and realize you wouldn't have lost it if you paid attention to bonds. Continue.
We welcome everyone who wants to conserve capital.
Very good. Where are we right now? Have the facts changed, Mr. Michael?
I'm going to up you one on Maynard Keynes and go with Rogoff Reinhardt. I wonder what they're thinking after spending years writing a series of papers on financial repression and warning governments about the problems with excessive borrowing and debt to GDP climbing. It has all changed. What we knew as core Europe and fiscal austerity is gone. They've looked at the US and China. They want to join the party, and they're coming in and doing it. So yes, everything has changed.
2 days after this, I had the honor of David Folkerts-Landau of Deutsche Bank, who you and I know his work with Peter Garber and all, and he was heated that Europe would shift to fiscal liquidity. So I guess that's happening now within all the research capabilities of your bond platform and your economics platform. Is there a confidence Europe can make the shift with or without NATO?
We would argue they have to. If you look back over the last couple decades, Europe has underinvested in itself.
Yep.
And that's a result of decades of fiscal austerity. And they realize, certainly in Germany, that they have to catch up. They have to invest in their military. They have to invest in fiber optic. They have to invest in roads, bridges, all that kind of stuff. And they're going to, and they have the fiscal capacity to do it.
So when we're looking at the 10-year Treasury peaking at around actually 4.8 in the middle of January to where it is now around 4.2, what do you think the bond market is telling us in the U.S. and the economy?
The bond market is telling us we are your safe harbor. We are the anchor in the storm. We have yield now. So when there's volatility in policy, when there's volatility in risk assets, come in and join us. We will protect you.
So what is the best way when you're talking to your clients to position at this point?
I'm having meetings with clients every single day. I had a meeting yesterday with the university endowment thinking about these issues, and we met with them 5 years ago. 5 years ago, the aggregate bond market was yielding 2.25%. Today, it's yielding 4.5%. They didn't invest then. They're coming in now. They're making smart decisions. Investors want to get into a bond market with yield. You're starting at 4.5%. You can construct a portfolio of over 5%. That's very different than zero and negative interest rate policy.
I look at the yield space, and the answer is we've got a Bob Michael vector. You have called for price up, yield down. Maybe this is not the reasons that you looked for, but can you get this price up, yield down with tangible economic growth to sustain the machine? Dovetail this with Michael Feroli's work. Are we heading towards some form of NBER recession where we don't get the growth? Or are you more optimistic that we can get the Michael yield plus some potential GDP growth?
Yeah, I think the Fed has done a really good job of taking us into a soft landing. I think they're going to pull it off. I think we're going to get yields to stabilize here. Maybe the front end come down a little bit. The Fed still feels uncomfortable that they're too far away from their neutral rate. I think there are a couple more cuts coming, but I'd like yields to just stabilize in here. I don't actually want the 10-year to trade too far below the mid-4s. I wish it would just stay there. Right. I wish the 2-year would stay about 4% and give investors the opportunity to get into this bond market.
You and I know, with the Pope so ill, there's the Vatican, and we hope for his healthy recovery. Bob Michael, for you and me, the Vatican's on Madison Avenue at the JPMorgan Library, and you go in that red velour room where he locked the door and said, we have to save the country. We didn't have a Fed in the Gilded Age. Doug Irwin's in the FT, I believe it is today, with a brilliant interview of Dartmouth saying, look, it is the 19th century. Abby Joseph Cohen said yesterday, it is the 19th century. How does this Fed help the nation given tariffs?
The Fed has to balance all of these things. And I think a month ago, everyone and the market looked at tariffs as an impulse to higher inflation. Today, they're looking at it as a drag on growth, the material one. I tend to look at tariffs as economy killers. So yeah, you get a price shock higher, but that's going to dial down aggregate final demand. And that's what I think the Fed will be focusing on. They're going to be laser focused on the labor market. They're going to see if businesses and households retrench.
I agree with you on the labor market. Carl Weinberg on yesterday, High Frequency Economics. All of look at Lehman is at a 4.8% unemployment rate in the vicinity of Labor Day. We welcome all of you on your commute across the nation on YouTube worldwide. Good evening in India. I've got a special focus off of Ray YouTube on what you're doing in Bangalore and in Mumbai. We say good morning internationally on YouTube. Subscribe out at YouTube to Bloomberg Podcast, growing each and every day. Jess?
Well, Bob, this is, as you know, the last week we're going to hear Fed speakers before they go into that blackout period before the decision in the middle of this month. And of course, we will hear from Fed Chair Jerome Powell on Friday when he gives a keynote speech at the Chicago Booth's 2025 U.S. Monetary Forum. So what do you think markets want to hear from Fed officials before this week wraps up versus in reality what we will end up hearing from them?
I think what we want to hear is how they're weighing tariffs. And are they still looking for an opportunity to bring rates down to what they believe is a neutral rate? We'll also get the infamous dot plot, so we'll have some idea of how much higher the long-term neutral Fed funds rate will have crept up. I think it goes up about 0.25%. I'd expect Jay Powell to be very, very balanced and basically try to take a pass.
It's almost medical, first do no harm. Tell me about the dynamics of the market. I noticed like 3 months, 7-year went inverted the other day. Nothing I ever look at. But how does, when you go in, Bob, and Bob has 3 Bloombergs with 12 screens, unbelievable. The glow in the new JPMorgan building, it shines off Citadel across the street. It's amazing how that, they're on their binoculars across, what's Bob Michael doing today? They're looking at him. On your Bloomberg, how do you perceive the vanilla 2-10 spread, the 10-year or the 2-year real yield? What does Bob Michael look at to ascertain this market?
What I'm looking at is yield settling in at levels higher than I believed a year ago they would settle in at. And I like it. I like the fact that we may have a German yield curve from 2% to 3%. Mm-hmm. We may have a U.S. yield curve from 4% to 4.5%, 2s, 10s. I like credit spreads holding where they are because they're pricing in a soft landing. Those are the things I look for, and I think it's a great environment. By the way, we didn't talk about Japan. 10-year Japan, 1.5%.
Amazing. Yeah. Jordan Rochester at Mizuho, you should have hired him. Jordan Rochester says this is a sea change for Japan.
I can't even remember the last time we were up at 1.5%. 30 years ago.
The late Martin Feldstein, who was exquisite on this. Robbie Feldman at Morgan Stanley. That's a different bank, Bob. They said this would never happen, and here we are. With it happening, you're laughing at me, Bob. Bob,
I think we were one before Glass-Steagall, but I'm not sure.
There was a demerger, something. We won't go there, folks. When Mr. Diamond comes in, we'll harass him about it. Bob, I look at this market, and you're advising clients right now. Is it a total return market? The great Dan Fuss at Loomis Sales, is it that kind of market where you can make total return, or are you clipping coupons in the basement?
I think you're going to get some total return with yield settling a bit lower, with the Fed coming in and cutting rates a couple more times this year. But I think it's mostly a carry market. I think it's mostly an opportunity for active managers to do what we used to do pre-financial crisis. Right. When sectors get a little bit ahead of themselves, you dial them down and go into sectors that lag. I think this is also a bond market for more diversified portfolios to look overseas now. It's safe to go into non-dollar assets.
Jess, this is so charming. There was what we call the Blue Book, which was a Standard & Poor's thick blue book, and the value line you trip over on the floor. And Bob and I would be going, oh, the Boise Cascade, it looks so good today. It's like, remember, it's like a real bond market.
Yeah, then we didn't know how to price it. There was no Bloomberg. We had to punch it into our Monroe bond calculator.
So archaic.
Yeah, Bill Gross still has this on his desk. Good morning, Bill, out on the left coast. You had a Monroe trader And he and Charlie Gogolak were kicking field goals. They tried to make 3 points on a 20-year piece, and a guy named Secunda in Bloomberg showed up, and they said, no, you're not. And overnight, just the museum's right behind us here, folks. Overnight, the Bob Michael Act went away because people could do the convexity and duration. Boom, boom. Oh, God, I can't charge a field goal. Get another question in here, Jess.
Of course, I have to bring up R-star, everyone's favorite topic when people want to debate about the neutral rate, because you were bringing up the dot plots. Obviously, we get those quarterly. We last saw it in December. So when we get those in a couple of weeks from the Fed, the longer-term rate that they had updated was at 3. It used to be closer in recent years to 2.5%. Where do you expect, when people are debating where the neutral rate actually is?
Remember, they started doing this in 2012 because they had gone to QE, they had brought rates down to 0. They didn't think we in the bond market were smart enough to know what neutral was anymore, so they were going to help us out. That first long-term neutral dot was 4.25%. So that was textbook. That's 2% inflation targeting plus the long-term real yield on the Fed funds rate was 2.25%, 4.25. That's where we are today. I think it's closer to 4 than 3.
20 seconds. Is it stagflation or is it legit dampened but good nominal GDP?
I think it's good nominal GDP. I think we're getting the bad stuff now as far away from the midterms as possible. The good stuff will come at the back end of this year. Extension of the Tax Cut and Jobs Act, some deregulation, closer to the midterms, if you will.
I'll editorialize, folks. For those of you in a panic after what we saw at an historic Tuesday, I agree with Mr. Michael. Bob Michael, thank you so much with JPMorgan and the spirit
Always
of the
a
nation
pleasure.
here and on what we see in a constructive nominal GDP, given all the policy out there. Bob, you got to get up so I can get Michael Barr in here so he can do the news. Ms. Michele, would you see Mr. Michael to the door, please? I got to get Barr in here, folks, because we got to race through the news to get to what really matters, which is fighting Texas Aggie Auburn basketball.
That's right.
Right here. Stagger in here, Michael, and he needs a crane to get in a chair. So do I, for that matter.
Stagger's the right word.
As well. Futures up 19 with our news in New York City. Michael Barr.
Thank you very much, Tom, Jess, Lisa. President Trump defended his tariff plan, saying it would raise trillions and trillions in revenue and rebalance trading relationships, despite acknowledging it may cause economic pain. Trump spoke last night at his first joint address to Congress of his second term in the White House.
April 2nd, reciprocal tariffs kick in. And whatever they tariff us, other countries, we will tariff them. That's reciprocal, back and forth.
Trump also spoke about the war in Ukraine just days after his fiery encounter with Ukrainian President Zelensky in the Oval Office. The president outlined a letter he received from Zelensky.
I appreciate that he sent this letter, just got it a little while ago. Simultaneously, we've had serious discussions with Russia and have received strong signals that they are ready for peace. Wouldn't that be beautiful? Wouldn't that be beautiful?
However, just a few moments ago, there's a report the U.S. has cut off intelligence sharing with Ukraine. The Democrats had a lot to say about President Trump's speech. Congressman Al Green challenged President Trump's assertion that he had won the popular vote in 2024. Speaker Johnson called for Green to be removed from the chamber. Green spoke to the media in the hallway.
I'm willing to suffer whatever punishment is available to me. I didn't say to anyone, don't punish me. I've said I'll accept the punishment, but it's worth it to let people know that there are some of us who are going to stand up against this president's desire to cut Medicaid, Medicare, and Social Security.
Afterwards, Senator Alyssa Slotskin delivered the Democratic rebuttal.
On the subject of Elon Musk, is there anyone in America who is comfortable with him and his gang of 20-year-olds using their own computer servers to poke through your tax returns, your health information, and your bank accounts? No oversight, no protections against cyber attack, no guardrails on what they do with your private data.
Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Jess, Lisa.
This is really cool. An empty basketball arena, and one kid comes in, Wade Taylor IV, IV, and resurrects the program. And last night, the Fighting Texas Aggies took down for the first time a #1 basketball team. Jess Menton, this is pretty cool.
I mean, don't sleep on Texas A&M basketball. I mean, obviously, we know that football reigns in the South. Not going to talk about
like
our
you know, Michael Barr
season.
feels the same way.
Yeah,
but,
you know.
But you know, actually, when I think it was the year I graduated, the girls team actually won the NCAA
Way
championship.
good. They led the way on women's sports.
They did.
Yeah, I mean, they're 22 now, but like in March Madness, this really supercharges them to take out
where we're gonna get up.
Auburn.
Yeah.
Do you know what a joy it is for me and Michael Barr and Lisa Mateo not to talk Duke basketball?
You know, Paul Sweeney's not here, so we don't have to hear about Duke basketball for now.
Fighting Texas Aggies led by Wade Taylor IV. They put his banner up in the rafters last night on senior night. Then they went out and beat the number one Auburn 83-72. I guess they just shellacked them. So we'll see. They'll get a new ranking.
I'm excited. Get ready for those brackets.
I got to follow them in the bracket. I usually only go with blue-colored teams.
Oh, really?
But
Well,
I'd
try
like to
maroon.
try the maroon. We'll have to see how that goes. Good morning in College Station, Texas. Good morning across the nation on your commute on Apple CarPlay, Android Auto, and particularly on Sirius XM, channel 121. We say good morning on YouTube as well, worldwide. Across the nation, subscribe to Bloomberg Podcasts. It's Bloomberg's Surveillance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got futures rising. This is after Commerce Secretary Howard Lutnick sparked some optimism that the White House may walk back some tariffs on Mexico and Canada. His comments on Fox while they fueled an after-hours rally. Lutnick will be speaking with Bloomberg live at 8 a.m. Wall Street time, so be sure to tune in then. NASDAQ futures up 0.5%. We have Dow futures up 0.1%. S&P futures up 0.2%. The two-year yield, 3.93%. That's down 5 basis points. The yield on the 10-year, 4.23%, and that's down 1 basis point. To commodities, oil extending its decline right now. We have Brent crude down more than 1% at $70 a barrel. WTI crude $67 a barrel. We have COMEX gold higher at $2,928 an ounce. The Bloomberg Dollar Spot Index down about 0.4%. Economic data, the MBA Mortgage Applications Index, that rose more than 20% last week. That's the fastest pace in 7 weeks. We have more for you on tap at 8:15 Wall Street time. We move on to ADP payroll data. Not long after February S&P Global PMI, we have factory, durable goods orders, and the ISM Services Index. And let's not even forget, the Federal Reserve issues its beige book today as well. So
I'm the
a
only
lot
one who
going
doesn't
on.
read it. Thank you.
Yes, there you go. Tom is anticipating it.
I'm looking at Brockton in the control room. Usually gets me the cliff notes.
Working on that. As far as earnings, we have CrowdStrike down 7%. It gave a disappointing earnings forecast. Adidas down 1% in Frankfurt. Earnings growing. Adidas.
No, it's Adidas.
I do Adidas. That is your Bloomberg Business Flash.
Lisa Mateo, thank you so much. I have waited and waited and waited for this. He sent me a love note yesterday and said, "You idiot, you don't know how to pronounce potassium chloride up in Canada. Potash."
Oh, I saw that on
Joining us
LinkedIn.
now, my grammarian, Terrence Haines, joins us with Pangaea Policy. Terry, thank you for the love note yesterday. Mark, the wonderful Mark Crumpton keeps a list of the names I mispronounce, starting with Jess Menton, and it's a long list, Terry. Thank you for adding to it yesterday. So 85% of potassium chloride that Republicans in the Midwest need comes from Canada. You got Feenstra in the 4th Congressional District of Iowa. When does the Republican from Southwest Iowa dial 1-800-TRUMP and say, stop it? When does that happen, Terry?
In the case of Randy Feenstra, I don't think that happens at all, frankly. But the issue here is kind of how to manage the tariff relationship and what the United States gets out of it. Scott Bessent has a great phrase for this, and the essence of it is that it's path dependent. It's path dependent upon what the other side does in tariff negotiations. So I doubt Mr. Feenstra is going to be in a situation where he needs more potash from other sources.
So you're optimistic we're going to get a workout of this, or do we get into the game theory of reciprocity, tit for tat?
Well, I think the answer is both, frankly. You're going to have individual tariff negotiations with Canada and Mexico ongoing based on geopolitical matters. You're going to get the reciprocity overlay on top of it. I think what markets aren't fully digesting is that the end game of this is not more and more tariffs. The end game of this for the Trump people is less and less tariffs. And I don't say that in any sort of Pollyannish manner. But the goal is to actually reduce trade barriers. So
let me bring in Jess Menton here. Jess, to Terry Haines, please. Don't say potash or potash.
I'll avoid that one, Tom. Terry, something I'm thinking about heading into next week, because those implied volatility is picking up steam for the equity market here. So as you know, we still have that deadline for a government shutdown coming on March 14th, but then also on March 12th, even ahead of that, there still is supposed to be those tariffs on all aluminum products. And so what do you think that really means as we're getting closer to those deadlines, as well as other ones that are supposed to happen in the beginning of April?
I think there's still going to be some tariffs on aluminum. They're going to want to show, Trump's going to want to show bona fides on that. And I think there's a rising potential for a government shutdown. You see Democrats last night grasping at anything they can to show resistance, to show differences, and the shutdown's it, because what they're about at root is more spending. What Trump's about at root is less spending. There are three parties in the negotiation: congressional Democrats, Republicans, and Trump. Two of those three benefit politically from a shutdown, frankly, Democrats and Trump. So, there might be one short term. That never matters for markets particularly, but stylistically, it's a bad look.
How do you respond, Terry Haines, to where is John Thune? Well, people say, okay, the House is fractious. Everybody's running for office starting Friday. Great. The Senate is more measured. Where is the senator from the Dakotas?
John Thune, I think, has done a very good job of keeping everybody together, number one, in his party. Number two, he's doing a very good job of quietly establishing the Senate as an effective counter to Trump. You have to look no farther than defense spending to get that. At a time where markets think that defense spending is going down because of some cost savings that Pete Hegseth wants to do, the reality is that there's kind of a dream team of senators that are going to pump up defense spending, in no small part to react to China's announcement that it's going to increase by 7+%.
I mean, I looked, Terry, at Ruchir Sharma's book, arguably could be my book of the year. I'm not there yet, folks, on capitalism. And basically, he says, whatever the process, spending will go up. After the speech last night, after what we've witnessed deep into the Trump second term, do you see any frugality out there? I don't observe it.
No, there's no frugality out there. And the reason why is because they judge. I mean, to them, this is not economic policy only. This is not economic crisis or problem only. What this is all about is marshaling and improving the U.S. economy as much as possible, turbocharging it to meet geopolitical goals. Everything starts from debt service. We now pay more in debt service than anything else. That is an intolerable situation if you're interested in United States hegemony, as Trump is. And what they're going to want to do is turbocharge the economy, frankly, to meet those geopolitical needs. That's one reason why you heard so much about manufacturing for defense last night, shipbuilding, steel making, all that.
Oh, that's the politics of the moment. Terry Haines with us, and we're going to continue in a moment. A bit ago, 7:02 a.m., a headline: the United States cuts off intelligence sharing with Ukraine. That from the Financial Times. And now a headline coming out: a Ukrainian official says the nation's still getting U.S. intelligence. We'll see what the next headline says, Jess.
Terry, of course, there's so much focus on those pro-growth expectations potentially from tax cuts and deregulation. What is exactly the timeline of when investors as well as Americans could potentially see some of that happen through Congress?
Well, this is the problem, Jess, is that in a nutshell is that Trump this time out is front-loading the bad news for markets, the tariffs news, with the expectation that things are going to improve throughout the year in markets as they understand that the tax cuts, deregulation, energy dominance, and so on is very likely. That happens, the tax cut bill happens in the fourth quarter of calendar 2025. I'd give it 80% today. 8 years ago, I was almost alone in the markets and telling people that the tax cut bill was going to happen and it was going to be a big one. But the same dynamic exists today. It's going to take them that long to get to the finish line for a variety of procedural reasons.
Terry, I got to get this in from Greg Giroux and Bloomberg Government, and you're expert at this. What are Republicans saying to Mr. Trump, President Trump, who are in close districts? Do they have a say in the discussion, or are they so marginalized nobody cares?
Well, they have a huge say in the discussion, and I'd point immediately to the New York and New Jersey members to whom Trump has owed a House majority on the SALT negotiations, right? So 8 years ago, SALT didn't matter at all. SALT went away. This time out, Trump's listening very closely and positive to those who want the SALT deduction to come back.
Right.
They will fundamentally they'll play the smartest politics they can and try to make sure they do everything to maintain their majorities. Part of that is getting the tax bill done in fourth quarter of 25 so that they can run on it and the benefits in 26.
30 seconds. Is there an El Dorado out there to save the middle ground GOP?
Yeah, there's a bunch of them actually, and I'd put Thune in there among others, but yeah, there's a bunch of them, and there are lots of good pragmatists. French Hill's one, so yeah, I think there's a bunch out there.
Terry, I hope email me every time. I love emails from Terry. Email me, Terry, every time I mispronounce something. It'll be great. Terry Haines Pangaea, thank you so much there on the state of play. We say good morning, Senator D'Amato of Long Island, always and forever, 87 years old. Good morning to Senator El D'Amato, very early supporter of all that we do here at Bloomberg. Futures up 22. What's the character of the lift, Jess?
We'll look at NVIDIA pre-market up 1.6%. And when you have a weighting close to about 6% in the S&P 500, the third biggest, you're going to see the market turn on this.
On your arm there, do you let people see your NVIDIA tattoo?
Sometimes.
Sometimes, it depends. Okay. Jess Menton with us here. Paul Sweeney and Alex Steele later from Bloomberg Invest on YouTube worldwide. Subscribe to Bloomberg Podcasts.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this Bloomberg Business Flash brought to you by IBKR. Will year-over-year change in U.S. PPI exceed 3% in February 2025? Well, at IBKR forecast trader, the yes recently at 39%. What's your take? You can trade your prediction at ibkr.com/forecast. We've got futures advancing this morning. Traders weighing the latest tariff developments, and also they're getting ready for Friday's monthly jobs report. We'll head over to NASDAQ futures up 0.5%, S&P futures up 0.3%, Dow futures up 0.2%. The 2-year Two-year yield 3.94%, down 4 basis points, and the yield on the 10-year 4.24%, and that is little change. To currencies, the Bloomberg Dollar Spot Index down about 0.4% because of the news flow. Want to go to the Mexican peso, little change. Same for the Canadian dollar. The euro right now up 0.7% at 107.09 against the dollar. Bitcoin is higher, up more than 3.5% right now, climbing up more than 90,000. Few companies making news. We'll start with Palantir starting a joint venture with TWG Global. They want to expand its AI commercial capabilities across financial firms. You have Palantir shares up 2%. And Saudi Aramco reportedly considering a potential offer for BP's lubricant assets. That's including those operating under the Castrol brand name. And finally, job cuts coming to Disney. Yeah, an internal memo shows about 6%, 200 jobs being eliminated at Walt Disney's ABC Entertainment TV networks. The biggest portion of that will affect its ABC News division here in New York. That is your Bloomberg Business Flash. Jess and Tom.
Lisa, thanks so much. Jess Menton in for Paul Sweeney. Paul Sweeney and Alex Steele at Bloomberg Invest. Look for that later at 8 a.m. here in 25 minutes. Anne-Marie Horton in Washington with Howard Lutnick, the Secretary of Commerce. Well timed now. With great acuity, Lauren Seidel-Baker joins us with ITR Economics. It's a very detailed note. Get that note from ITR Economics. Lauren, let's start at 60,000 feet. How have you adjusted real GDP out 1 year?
Simple answer, we have not. The Trump administration policies that we see coming down the line, they will affect specific sectors. They will maybe affect, say, the economy of DC if there are massive layoffs in that one region. But national level, the fundamental drivers are just too big. The momentum behind our national GDP is just too much for it to turn on a dime. So 1 year out, we're still expecting growth. Now, pricing might change. Inflation is certainly at risk, but we are not revising our GDP forecast.
It's really important. The mass, folks, on a physics basis, the mass of America can always outweigh regional or urban or MSA problems like what we may see in Washington. With that said, you have tariffs across our northern and southern border. How do they fold into the confidence you have in our economic growth?
So tariffs will absolutely hit pricing. Now, we had been expecting elevated inflation probably by mid this year, back half of this year, starting to ramp back up for other fundamental reasons. Again, those fundamental drivers don't just evaporate because something else is happening, those political policies, those black swan events. So tariffs are really an upside risk to pricing that could cause some different buying behaviors amongst consumers. But really, pricing is the risk. Volume is a little bit less at risk. We still see wages rising at a faster pace than inflation. I don't think inflation is getting back to recent 2021 two peaks, certainly not back to the 70s and 80s. We've been here before. We've seen much worse than this. But from a growth perspective, I would say stay the course.
So, Lauren, we'll have another update on the Atlanta Fed's GDP Now model for the first quarter, which obviously kind of rattled markets a little bit at the start of the week after it was revised down close to 3% here. But how much of that is more seasonality factors and then also potentially companies trying to front run these tariffs when we're seeing consumer goods imports surging by nearly 26% year over year in January?
Yes. So some of those factors I don't think are fully adjusted for. If you look at, say, imports, exports, those will be hit by tariffs, obviously. So I think the model might not be fully accounting for just that amount of volatility that we're seeing in this specific cycle. But clearly a big headline that came across. Now, it turns out consumer sentiment doesn't tend to be one of the most reliable leading indicators that we look at in our world. Business sentiment, CEO confidence, that does tend to have a little bit more impact. So I am looking at companies, but today, at least the conversations I'm having in the general sentiment indices I'm following, they're still showing that folks want to be hiring this year. They're still short staffed. They're looking for more workers to come on to be ready to meet all of this demand coming down the line.
This is too much optimism. I can't take it. Lauren, what's the unemployment rate do? I mean, I got people modeling out 4.x unemployment jobs report on Friday. We'll go beneath the headline data at 8:30. But Lauren Seidel-Baker, just is as simple as I can, 4.x or 5.x, where does the unemployment rate become part of the dialogue?
So the labor market overall is still very tight. If you just look at, say, the median job, we still have less than one unemployed worker for each available job opening. Now, where we're seeing the disconnect is in specific skills gaps. So say we're getting mass layoffs from the Doge efforts, right? Those same workers are not the ones who have construction skill sets or know how to run a CNC machine, for example. So there should be some amount of reskilling, retraining. That match is not quite there in the way that it has been in the past. But the overall numbers, something like the unemployment rate, it tends to obscure that. What we'll probably end up seeing is that for certain skill sets, you are in high demand, someone's trying to steal you away from your current company. For others, maybe there's that longer duration of unemployment. I'm watching those numbers closely to see if they do start creeping up. And just to be absolutely clear, Doge layoffs have not yet hit the jobs numbers. So something like last week's new unemployment claims, it got a lot of attention. That does not yet reflect those efforts.
Since a lot of this data is more delayed for the first quarter, and we've really only gotten the January numbers, what are the most important metrics coming up? Obviously, we have the employment report on Friday, but other indicators within that report and then other data coming soon.
Yeah, we'll be watching those indicators. But again, if we're looking at Doge's policies, one of them was to accept this buyout and still get paid through September. So we won't see those numbers really hit until September. There's going to be a very long lag time. I think there's going to be enough blame to go around as we do see these numbers come in either a little hot or a little cool. But overall, it's going to be hindsight this cycle. What I'm watching again is still that median consumer. And critically, I'm watching wage inflation. Are we still earning more enough to make up for this inflation?
Lauren, thank you so much. Lauren Seidel-Baker with us, economist at ITR. Futures lift not quite where they were 20 minutes ago, but up 19. The VIX 23.47. With our news in New York City, Michael Barr.
Thank you very much, Tom, Jess, Lisa. President Trump defended his tariff plan, saying it would raise trillions and trillions in revenue and rebalance trading relationships, despite acknowledging potential economic pain. The president, before a joint session of Congress last night, also mentioned tax cuts.
I'm calling for no tax on tips, no tax on overtime, and no tax on Social Security benefits for our great seniors.
He also talked about wokeness.
Wokeness is trouble. Wokeness is bad. It's gone. It's gone.
Senator Alyssa Slotkin of Michigan delivered the Democratic response.
America wants change, but there's a responsible way to make change and a reckless way. And we can make that change without forgetting who we are as a country and as a democracy.
During Trump's speech, Speaker Mike Johnson ordered Texas Democratic Representative Al Green out of the chamber for speaking out during the address. Ukrainian officials say the country still is getting U.S. intelligence. The official in Kyiv spoke to Bloomberg on condition of anonymity. Earlier, a report from the Financial Times said the U.S. cut off intelligence. Powerful storms have killed 2 people in Mississippi, torn the roofs off an apartment building and a nursing home in Oklahoma, and threatened communities across the nation. Tuesday's large system brought blinding dust storms to the southwest, blizzards with whiteout conditions to the Midwest, and raised fears of wildfires. In New Orleans, high winds forced some changes to Mardi Gras. The city shortened the celebration's 2 biggest parades to wrap them up before high winds moved in. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Jess, Lisa.
Michael Barr, thanks so much. Joining us on studio, usually ensconced out in Milwaukee with a case of Pabst close by. Emma Leddy joins us, head of equity at Allspring Global Investments, but barely describes her contribution to value investing in America over the recent years. Wonderful to see you here.
Thanks for having me, Tom.
I looked at the screens yesterday in the studio, and I said to the fam, I said, literally, that's like 5 days in 30 years that have been this nuts. Do you hide in value stocks now? Do you get out to growthiness? What's the emotion of being in value stocks given the cacophony of news?
Yeah, it's a great question, Tom. And I think the best thing investors can do is take emotion out of the game. But to get directly to your point, clearly there's a shift toward more defensives, which leans a little bit more toward value right now. And it's not that surprising to me, given where the success in the market has been and where the multiple expansion has been. And that has been in those big names with good growth and good earnings. but the multiple expansion has just been huge. And we're starting to see earnings deceleration in those areas. So investors are running to a little bit more defensives.
I mean, I got across 4 standard deviations, a company called John Deere. You may know them, Moline, Illinois. Just a little bit. And, you know, did you drive a Deere tractor when you were a kid? Dad put you on the tractor?
Never drove one. Have gotten a ride.
My father had the Ford tractor with the split clutch, if you know what that is, folks. It was a death instrument. Ann Michele, I look at John Deere and I'm enjoying it 510 down to 452. It's at 20 times earnings. Is 20 times PE value?
I mean, you know, this is such a hard question, Tom, because obviously the market is projecting what earnings could be along with, the, you know, implying that into the multiple. So in today's world, 20 times still appears to be a little pricey, depending on what happens in the micro or in the macro environment. But again, I think we're paying attention to company fundamentals and trying to focus there. There's all kinds of macro noise that feeds into it, but if that company is doing well and earnings can go up, it's going to be good.
Do you have a copy of Graham Dodd in your office?
I do.
Which edition? Come on.
I mean, I don't know the edition,
You're too
Tom.
young for the first edition.
Oh.
Okay. You have a copy of Graham Dodd?
I do.
Jess, have you read Graham Dodd and Coddle, cover to cover?
Not cover to cover.
It starts with railroad stocks. You're like 42 pages into it, and your martini spills because you're falling asleep. Jess Menton, Ann Michele.
Something that I've noticed is 3-month implied correlations have started to pick up after being at historical lows. So that just essentially means that stocks are moving more in unison. So when that happens, obviously, especially when you're in a volatile environment and you have things moving more in tandem, specifically with value, where do you position? And do you think those correlations rising will last long, or is it something that's going to be temporary?
You know, it's a good question, Jess, because like there's been, again, so much concentration in the market, so much driven by a small set of names. We believe the broadening out would happen. The correlations do get really tight in the beginning when you see the broadening out of the market. So if banks start to outperform, they tend to all outperform together. The same with, you know, certain healthcare names, et cetera. But it is the company fundamentals that will matter in the end. And, you know, you want to pick the right stocks. And I do think we're starting to see that turn toward active investing and making the right stock selections, and the market's going to reward us for it.
I'm glad you brought up active investing, because I did a story last week where I was looking at how and it's probably not surprisingly just based on the metrics and the dynamics for active managers, but just how under-owned they are. The most under-owned they were for the Mag 7, for instance, was Apple, Microsoft, and NVIDIA. So in these types of dynamics, they're going to do better. And actually, up until last week, active managers were actually outperforming their benchmarks by close to 50% so far this year.
Yeah, we're seeing the same thing, and it's not surprising. And again, there's some restrictions on active management. If you're managing a diversified portfolio, you could not be as concentrated as indexes were. So there were some restrictions placed on active managers. But, you know, again, I would just say we were more risk adjusted based on the diversification we had in our portfolios.
Okay, I'm looking at the large cap value Allspring portfolio. This is not, she doesn't know what NVIDIA is, Jess. You just say Ann Michele has no clue. It's like Mag 7 free. You can lead it with Charles Schwab. You got Philip Morris, Allstate, Citigroup, Cummins. Cummins is like John Deere. You know, as Gartman would say, it falls and hurts your foot. Ann Michele, what's the duration of where value works? Does it work for a couple quarters? Or can you pop 3 years of excellence like you've done in the last year?
I think this can continue, Tom. Clearly, the interest rate environment has changed and is changing across the globe. We see the rest of the rules of the game are changing as well. Fiscal policies are changing dramatically, and it's going to make investors lean a little bit more toward a defensive positioning.
Because value works, or because growth doesn't?
A little, you know, I actually think because value works, but, you know, again, we're going to have to see the way things turn out and what the rules really look like. I still believe AI is going to be a big cycle, and that innovation is not going to go away. It's going to drive some areas of growth for certain.
Well, Only about 17% of active managers have outperformed their benchmarks over the past decade, according to Morningstar Direct. So is this something that's going to be just shorter term temporary?
Again, I think the interest rate cycle had a lot to do. When you were living in an almost 0% rate environment, it was difficult for any company to fail. I mean, they had to work hard to fail. And again, it drove a lot of success into concentrated names that made it more difficult for active managers. The interest rate environment is different. I think it's going to stay higher or more normal, I would say, for longer. And again, that's going to normalize the playing field for companies. And I had to bring this to you, Tom, because I know we're headed into baseball season, but the old Babe Ruth quote of yesterday's home runs don't win today's games. I think we're in that environment today.
Means the Brewers are going to beat the Cubs here. Wisconsin and exports to Canada. This is not funny.
It's not funny.
It's not funny at all. What are you going to see in your Milwaukee up to Green Bay on Lake Superior? What are you going to see?
I think we're going to see some challenges here in the near term. And again, it's such a volatile period of time. I don't know what news we're going to get today that might change it. And I think that's can you imagine managing a company in this environment? I think the best CEOs and CFOs are, trying to do what investors are, keeping their head down, not overreacting, but waiting for things to settle out here to really figure out what they have control of and what they don't.
The heart of the matter, and all I'm reading, and Doug Irwin again in his wonderful interview here in the last 24 hours at Dartmouth, his book, folks, is definitive on the history of trade, including the Gilded Age. Anne Miletti's too young to remember the Gilded Age, but the basic idea here is Wisconsin leads with machinery. Yeah. And that's got lots of intermediate goods where I'm going to show, Brockton, you remember when I was in shop, right? The teacher gave me a pass. You can go to the cafeteria and talk to the cheerleaders. Okay, you got a piston, and it's made in Colorado from aluminum in Tennessee. It goes up to Milwaukee, they bless it, and then it goes to Canada and moves around twice, and then it comes back. Yep. So what does that mean for the great Northwest?
I do worry about what this means because, Tom, as you know, if prices go up too much and it has to get passed on to consumers, it will have an impact on demand, and then companies have no choice but to pull back on labor. And that would be, harmful.
I agree. Labor, there's all this talk about, MBA stuff at Marquette and all that baloney. Yeah. It's about jobs.
It is jobs.
Doug Ford up in Toronto is going to call Dearborn and say, this is the reality. And Dearborn is going to call, Dearborn's in another state. Dearborn's going to call Washington and say, we're laying off 10,000 people tomorrow. And they're not, Disney laying off 6%. Yeah. It's like real jobs, right?
It is. And I think we all can see that the economy is also softening in the background as we're doing this. And so that brings on even more challenges. I mean, we won't have a lot of time to wait if things don't change here.
I agree strongly. Miletti, thank you so much. We're strong with Allspring, always on value investment. Did you see how she gave you shade? You were talking, you had some brilliant, intelligent question, and she said, Jess, you don't remember a normal bond market. Did you see that? That was rude.
Bob did that to me as well.
I know, it was a group effort.
Everyone's kicking up.
The whole negative interest rate thing, we're like, really? That's going to work out. Miletti, thank you so much. Of course, folks, the price here of having Jess Menton. Yesterday, we played Tanya Tucker yesterday. Where else are you going to hear that worldwide? She has a tantrum and says, you can only play Texas music. So in honor of College Station's finest, Dusty Hill, we begin strong with X on the Border, ZZ Top.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
What's the immediate take of a tariff war?
For the longest time, technology has been the driver of this market.
With Lisa Mateo on markets.
AI affecting demand for cloud computing.
And Michael Barr with news.
Trump declared a national emergency at the U.S. border with Mexico.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Michael Barr, Lisa Mateo. Paul Sweeney on assignment with Alex Steele. Bloomberg Insight, Bloomberg Invest, I should say, downtown, and we'll be at that at 10 a.m. with economic data near the 10 a.m. hour as well. This morning, Bloomberg Surveillance, we're brought to you by BAM Mutual. They insure municipal bonds that finance essential infrastructure and provide guaranteed income to improve any portfolio. Learn more about municipal bond credit quality. Visit BAMBonds.com. I'm going to spell it BAMBONDS, BAMBonds.com. Jess Menton and Tom Keene here. We're waiting on an important interview, Anne-Marie Horner and Company, with the Secretary of Commerce. We're going to line that up here in a moment. Jess Menton, your thoughts on the festivities of the last 48 hours?
I mean, it keeps it interesting, especially if you're looking at 1% moves in the S&P 500, picking up steam this year. So 12 sessions so far out of the 41, we've seen the S&P 500 move 1% in either direction. So that's about a quarter of the time here. So something we hadn't seen quite as often last year. But looking ahead to Friday's implied moves here, because the S&P 500 is expected to swing 1.3% in either direction on a Friday. So that would be the biggest implied move for Jobs Day since March 2023, Tom.
Nice summary as well. And now a conversation with the Secretary of Commerce, our John Farrow.
Team here at Bloomberg Surveillance on your confirmation.
Thanks so much. And wasn't last night's speech amazing? I could have been more proud of President Trump.
We'll get into the niceties on that in just a moment. Let's kick it off, sir, with a question about your comments yesterday, when you suggested that maybe there could be a compromise on trade between the United States, Mexico and Canada, and maybe we'd hear more about that today. Has the president confirmed that? Is that still the plan?
Well, I think what happened is you have the trade ministers and all the people from Canada really working hard with our Homeland Security people. Remember, this is not a trade war. This is a drug war. We've got fentanyl still pouring into the country, and it's got to stop. So what's happened is they're showing us even more ways to try to stop the flow of fentanyl. And if they can stop the flow of fentanyl, the president is open-minded. There are going to be tariffs, let's be clear. But what he is thinking about is which sections of the market that can maybe he'll consider giving them relief until we get to, of course, April 2nd. But I don't want anybody to forget, April 2nd is the day that we announce our reciprocal tariffs around the world. And so April 2nd is coming, but this is about fentanyl this month.
Got that. Just want additional clarity. Just to be very clear on this. Yesterday when you said, I think the president's going to figure out, you do more and I'll meet you in the middle, we're probably going to announce that tomorrow, as in today. Can we no longer expect that announcement?
No, I didn't say that. I said the president is listening to the offers from Mexico and Canada. He's thinking about trying to do something in the middle. He's thinking about it. We're talking about it. We're going to, when I leave here, I'm going to go talk about it with him. And I think early this afternoon, we expect to make an announcement. And my thinking is it's going to be somewhere in the middle. So not 100% of all products and not none. Somewhere in the middle, because I think Mexico and Canada are trying their best. And let's see where we end up. So I do think somewhere in the middle is a likely outcome.
When you say somewhere in the middle, do you mean somewhere in the middle on tariffs, as in somewhere between 0 and 25? Or do you mean that certain groups, certain industries will just get a carve-out? And would that carve-out be, say, the autos? Because the president mentioned last night he'd spoken to the autos CEOs. Is it carve-outs we should be thinking about here?
Yeah, I think it's by product and by region. Remember, the USMCA, right, the United States, Mexico, and Canada agreement set up some policies that said you've got to have a certain amount of U.S. content in your products to be USMCA compliant. So I think he's thinking about those categories, the USMCA compliant. And doesn't that make sense to you, right? If you complied with the agreement, then maybe you avoid tariffs. And if you didn't comply with the agreement, well, you did so at your own risk. You knew you weren't complying, and therefore, it seems likely that's a place where the president will go. Again, the president gets to make the decision. I'm there talking with him about it, and so is the team. But our expectation is that it'll be categories. It will be 25%, but there will be some categories left out. It could well be autos, could be others as well. USMCA, go look at that. That was the agreement we made with US, Mexico, and Canada, saying those products are exempt. Everyone who didn't live under those terms and did so at their own risk and knew they were doing it at their own risk always.
Secretary Lutnick, good morning. Would you say right now that you think that U.S. autos like GM and Ford are compliant under USMCA?
That is my understanding, is the big three say they produce cars that are compliant under USMCA, which means they have sufficient U.S. content in them to be part of the USMCA agreement. So I think that's part of our discussion, and the president's really thinking about that.
So it's fair to assume then, especially given the constituencies of auto workers that the president was able to pick up in this past election, that it is the auto industry that could potentially get that exemption later this afternoon?
It's not really an exemption. Remember, we're trying to end fentanyl coming into the country. So we're trying to send a message that fentanyl has got to end coming in from Mexico and Canada. It's just has to end. And they've done a reasonable job on the border, and they're going to do a better job on the border. But this is, remember, it's a key about fentanyl for this month. April 2nd, we could talk about the rest. But this month, it's about fentanyl. And the president's trying to give Mexico and Canada some statements, some move forward, because they are trying their hardest, and we believe they're trying their hardest. But the fact is that we're going to put something on, because deaths in America have not decreased in a way that is sufficient. Deaths of fentanyl and opioids in America.
Many families will sympathize with this remarks. Me, myself, I know families who have been at the end of the suffering when it comes to fentanyl. But yesterday, though, the president questioned the fairness of Canadian banks. So what is it about? Is it about Canada's banking system, or is it really about fentanyl?
So this month, right now, is about fentanyl. When we talk about April 2nd, we will talk about the bigger trade picture between our trading partners, Canada, and our trading partners in Mexico. So April 2nd, I'll be happy to come on and talk to you about our thinking and our thoughts about a broad trading model. But right now, it's about fentanyl. This is a drug-related issue. Drugs coming into the United States of America have got to stop. The border has got to remain closed. That's the key of how you treat your great trading partner. You treat your great trading partner with respect, and you stop letting fentanyl into the country. So my view is the president is thinking about it. He's thinking about autos. He's thinking about USMCA. He's going to come up with a plan this afternoon. We're going to announce that plan. I think it's going to be in the middle somewhere. There's going to be 25% tariffs. It's not the middle as in a number. I think it's a middle in terms of USMCA and not USMCA. But the president will decide that this afternoon, and then we'll go on from there. But think about that. If you were compliant with USMCA, you did what President Trump asked in his last term. And if you weren't compliant, you did that at your own risk.
Secretary Lutnick, I just want to make sure that I understand this correctly. You're talking about the idea that this all has to do with the drug wars. And at the same time, some people have speculated that this could lead to a renegotiation of USMCA that would lead all around to even lower tariffs than before. Are you saying that's off the table, that tariffs are still part of this at the 25% level?
Well, remember, April 2nd, we begin our reciprocity model, which is how you treat us is how we treat you. And that is going to be part of his exemption, part of his tariff policy. And then he's got industries, autos, semiconductors, pharmaceuticals, steel and aluminum and copper, lumber. These issues need to come home. We need to help our domestic industries grow and flourish. And so we called out those product sets for extra focus. But that's April 2nd. So on April 2nd, our reciprocal trade policy will come out. in 2026, we renegotiate USMCA with Canada and Mexico, and we're going to have really clear analysis and clear focus on how that changes. But right today, let's be clear, today is about fentanyl.
We heard from last night the president. He said that he was fine with a little disturbance, but going forward, there will be all of these gains realized. Secretary Lutnick, are you concerned about the level of uncertainty expressed, not just in markets, but just even from people who you used to work with, where they're saying we don't have a clear sense of what the goal is? And I understand you're saying it'll come on April 2nd. But in the meantime, people are just putting all plans on hold.
Well, I'm not seeing all plans on hold. In fact, I'm seeing the opposite, right? We saw Apple commit to $500 billion. We saw OpenAI and Oracle commit to $500 billion of investments. TSMC just the other day saying $100 billion investment in America. SoftBank, $200 billion investment in America. So $1.3 trillion, and you think people are waiting on the sidelines? We feel it every day. All these companies are coming. They're building in America. They're committing to America. We agree April 2nd is coming. We have to do our work before we announce our plans on April 2nd. Of course, we have to do our work and do it properly and do it thoughtfully. But in this period of time, America needs a president to protect people from fentanyl. It shouldn't be killing people in our country. China still has fentanyl as a highest list of subsidies. Subsidies. They subsidize the production of precursors, the ingredients to fentanyl. They send it to Mexico and Canada, and into the country it comes. So our president has said, enough already, enough already. And that's why he's come up with this tariff plan today. April 2nd will be a fairness plan. And fairness plan is not that hard to figure out. If you have a
Secretary Lutnick, can I jump in there on the fairness plan? Is that an initial partial assessment and response, or will tariffs actually hit on April 2nd?
Well, there are a whole variety of laws in the United States of America that we will follow with precision. Some tariffs will come on right away, and then some tariffs will be registered, and they will take 3 weeks or 4 weeks, and they will come on in due course. So there's a process for tariffs in America, but we will announce them, and we will be negotiating with all these countries thereafter, and then they go into effect over a period of months. So basically, because, April 2nd, we will announce them, and then they come in.
Because there's months of studies, massive report, public opinion. This can take a very long time. So legally, there's no law that's short enough, really, to put tariffs in place on the 2nd. So how long between April 2nd until the tariffs actually hit do you think we'll see?
As I said, we launched our studies on January 20th. So April 2nd, those studies are done. Some tariffs can come straight away. Some can come weeks later. Some can take over a month or two to come online. But it will be very, very thoughtful, very organized. And we begin on April 2nd. We've announced it from January 20th that April 2nd was the day. We're sticking with our day. We're sticking with reciprocity. It is time for America to be treated fairly. And that's what President Trump is going to do. He's going to make sure we are treated fairly. He's talked about it last night. He's made this clear. So Mexico and Canada is about fentanyl today for the month of March. But on April 2nd, it's about fairness. And yes, that is a process that comes in that is strictly specific to the laws. But it'll take over a month or 2 months to come in. But once it's in, they will stick, which is treat us fairly, treat us properly, or don't trade with us.
Mr. Secretary, I was a man of my word. I am a man of my word, and I promised we'd come back to the address last night, so let's finish there. The President of the United States talked about a big, beautiful drop in interest rates. A lot of people in this market are curious whether the President is no longer sensitive to the deadly gyrations of the equity market, that the focus, the emphasis now is on the bond market. Is that the shift? Is that the way to understand things?
No, I think that is too specific. I mean, let's face it. If we balance the budget of the United States of America, interest rates are going to come smashing down. And I don't mean 10 basis points. I mean 150 basis points. You're going to have an explosion in the housing market. You're going to have an explosion in the equity markets, because this is not a manufactured cut in interest rates like you saw last time with this huge money supply, which created the vast inflation. This is the right way to do it. You stop printing money. You stop running deficits. You balance the budget of the United States of America. You smash interest rates down. You produce enormous amounts of energy, drive those prices down, and you will see the greatest equity market and the greatest economy in the United States of America. Now, remember, this president is worried about the United States of America. Sometimes I get asked questions about, am I worried about Canada? Am I worried about Mexico? And am I worried about the EU? My president is worried about the United States of America, and you are going to see the greatest equity market and bond markets under President Trump.
Well, let's worry about the American data right now, because equities have rolled over just a little bit. You know the market well. I won't make a big deal of it. We're just a bit softer off the back of this data from ADP, which is a downside surprise at 77K. The estimate was 140, so we're sub 100. We'll see what we get on the ISM later on this morning and on payrolls on Friday. But as you know, Mr. Secretary, the data over the last few weeks hasn't been great. The survey data has been softer, and a lot of these companies in these surveys have pointed to tariff uncertainty. Do you accept that the business community needs some clarity? Or whether it's 25, 15, 10, whatever the number is going to be, that the volatility around the trade story, the cumulative effect of persistent uncertainty is starting to eat into this economy a little bit?
No way. I mean, the president spoke about it last night. He said Biden left him a pile of poop. Okay? He left him a lousy economy that he's trying to fix. You're looking at data that's Biden data. Do not try to besmirch my President Trump with Biden's nonsense.
You think the ISM manufacturing number is Biden data? I just want to be very clear. That's your opinion. You're entitled to it. You think that's his data and not yours?
Of course it's my opinion.
Okay.
What possible could change? Seriously, we are in early March. My president took over January 20th. You think economic data coming out in early March is Donald Trump-related data?
Monthly survey data?
You gotta be kidding me.
Mr. Secretary,
Stop it.
Are you suggesting, we don't have to get into an argument about it, are you suggesting that when bond yields drop in a market that's worth trillions of dollars and investors place bets off the back of that economic data, that data doesn't count for anything, that data is somehow misleading?
I think that data is leading you to understand if Joe Biden was still in charge, you'd be in trouble. But you have a new president, there's a new sheriff in town, and I would bet on the economic growth that is coming from Donald Trump. You see the investments. You see it already. There's trillions of dollars of manufacturing moving to America. It's moving to America. That means the cavalry is coming. For every $1 trillion that invests in the United States of America, that produces 1% of GDP growth. Imagine that. You have a president bringing GDP growth directly to his economy. That's amazing.
Mr. Secretary, we appreciate your time and your opinion. As always, sir, the U.S. Commerce Secretary, Howard Lutnick there on the
Secretary
economic...
of Commerce, Howard Lutnick there, with John Farrow on Biden data and Trump data. A bit of an argument there. Classic Farrow there, I thought to say the least. The market moved ever so slightly. We've come in a little bit, but also because of actual Mateo data. With our Bloomberg Business Flash, Lisa Mateo.
And let's get right to the data. So we're talking about ADP employment change for February. Now listen, the survey was for 140,000, came in much lower, 77,000. The prior revised up to 186,000. And just about over an hour from now, we're going to get some more data. We have February S&P Global PMI, factory durable goods orders, and the ISM Services Index. Federal Reserve also issuing its beige book, and that comes ahead of the meeting on interest rates. So let's get to the reaction right now. So we have NASDAQ futures up about 0.2%. Not much movement in Dow futures. Little movement. Same for S&P futures. As far as a 2-year yield, 3.93%, down 5 basis points. And the yield on the 10-year, 4.23%, and that's down 1 basis point. Also, a rebound in Bitcoin up more than 2.5% at just over 89,000. Want to point out a few earnings quickly because we had Abercrombie and Fitch come in. Their shares down more than 6%. It's growth out outlook that trailed estimates. Then we get to Foot Locker. Weaker consumer demand, kind of a shift toward shoppers looking for deals, hurt their performance, but its shares are rebounding. They're up about 2%. And finally, soup maker Campbell's. They cut its guidance in anticipation of this softer back half of the fiscal year. Its CEO actually pointed to some weakness in its snacking categories. Shares down 5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now. I'm Lisa Mateo. That is your Bloomberg Business Flash.
Not
Jess?
Biden data, not Trump data, Mateo
There
data.
you
That's the
go.
way to roll here at Surveillance. We welcome all of you across the nation after the festivities last night. Thank you, Joe Matthew and Katie Lines, for just a great job of parsing through the theater that we saw last night on With It Some Politics. Jess Menton in for Paul Sweeney. Paul and Alex Steele will be at Bloomberg Invest downtown today with important conversations. This is the right guest at the right time. He has a legit academics and books on our politics, our nation, with affiliation with the Harvard's Kennedy School. Now, for a better pizza in New Haven at Yale, Gautam Mukunda joins us this morning. Gautam, your world is being blown up. You're at Yale School of Management. You got to sit there and go, the world's blown up. I don't like the finality that we're at a new regime. Do you feel like the Washington consensus is it a new regime, or can it recover?
So I think the answer to that depends essentially, as always, on what happens next. We're already, as you already heard, there's some softness in the economic numbers, and it's just like observable. So even setting aside the economics, essentially every major initiative that Donald Trump has launched in his first few months in office has very negative polling responses. Elon Musk is not viewed very favorably by people outside the Republican Party. This sort of massive disruption of the federal government is not. And as the effects of that start to ripple through, that's going to go down more. If Trump's numbers drop to the same level they were 3 years into his last term, then my guess is that the old system will start to recover its strength and find ways to push back. But we don't know yet.
Gautam Mukunda with us. The book is Picking Presidents to be direct, trench it at this moment. Jess Menton?
I'm curious about your thoughts when it comes to the direction of the economy, because U.S. GDP growth has tracked above 2% 9 of the last 10 quarters. So is this situation more a stagflation, or is it more just we're seeing a stalling out of above average trend growth over the past few years coming out of COVID?
Right, and the rebound was very strong, and the U.S. economy did better than everybody else in ways that you can imagine the frustration of the Biden team and their response to that. But if we think about sort of the major initiatives that are coming through, right, tariffs are not going to be positive for economic growth. This level of uncertainty is going to affect capital investments significantly, and people are just worried. There's a really striking phenomenon we're seeing right now where labor markets are frozen. That is, unemployment is very low, but people are not hiring and people are not leaving their jobs. And a frozen labor market is not good for productivity. I'll also note one thing that people don't seem to be paying enough attention to, which is housing starts 18 months ago went through the floor, in particular for sort of rental properties. And what we're seeing is rent is going up. It is taking up more and more parts of disposable income. And we're not going to get new rental properties that will sort of deal with that demand, which is people are feeling the pain of that really intensely. I live in the center of Boston. My friends who are sort of very successful professionals cannot afford to pay rent in Boston now. It is genuinely astonishing.
Okay, we're gonna do an audible here, folks, for all of you across the nation, and we can do this with Professor Mukunda. He hits one of my third rails. This morning, Steve Ratner had out a fantastic bar chart of the tariff impact across deciles. I went one further in my comment and said, I believe rent is a fixed cost. Like maybe, you think, is rent just meant a fixed cost or a variable cost?
I feel like it's a fixed cost for
you
me.
Nailed it. A+. with Mukunda, great inflation, you get an A+. Got him. This is really, really serious. I mean, if I take rent as a fixed cost, the tariff impact on, say, the bottom 3 deciles, and to use a Yale word, it's ginormous, isn't it?
Well, I use ginormous on a daily basis in class now, so it's definitely a Yale word. It is huge. The tariffs are going to hit, and then I'll just sort of we just heard both the president yesterday and then the secretary today proclaiming that Trump was going to balance the budget, I mean, logic, we all know that's not actually going to happen. Like that's absurd. That's exactly the opposite of what he did. But the plans that the Republicans are talking about involve huge cuts to Medicaid as essentially that's not a forecast. It is the only way to make the arithmetic work, and arithmetic yields to no man. So given those consequences, the distributional effects of these are going to be very large, and the low-income voters who Trump remarkably captured in 2024 for the sort of the first time in the history of the Republican Party, they're the ones who are going to take this in the teeth harder than anybody else.
So is Trump really trying to use these tariffs as a way to raise revenues to finance tax cuts? And if so, what kind of lasting repercussions could inadvertently happen to the economy because of this?
So, the problem is the tariffs do not exist in the same order of magnitude universe as the tax cuts, right? And tariffs that did exist in that are impossible because you simply could not import, you couldn't import anything against tariff barriers of that size. So the idea that he's using them to raise revenue for tax cuts is just a fantasy, right? It's like saying that you're going to lose 100 pounds by cutting out your morning oatmeal. I think the longer lasting consequences are less about that and more about the sort of deep and profound damage to the relationship, in particular with Canada, that we're seeing now. The Canadians now boo the national anthem on a routine basis. I'll just say, it takes a lot to make Canadians boo you, right? You really, you're doing some pretty severe things here. And the giveaway is when they talk about stuff like fentanyl, the best estimate of the amount of fentanyl that's coming over from the Canadian border is 0.2% of the total. You're going to cripple our relationship with our most important trading and partner and our most important ally over 0.2%. Right. That seems like a really strange set of choices.
How do you, and folks, the Mukunda approach here with his books, including Picking President, is remarkably balanced, even if you think he's from the People's Republic of New Haven. Just as plain as I can, I think all of us, including Republicans, are in search of a cogent Democratic response. Get out your calendar. When do we see that?
Probably not for a few months yet. You're starting to see Democratic moderates be a lot more pugnacious. You see, Seth Moulton calling J.D. Vance a coward for what happened with Ukraine. And my observation is not just Democrats. My Republican friends were pretty uniformly horrified by what happened to Zelensky in the Oval Office. So I think you might start to see some response congealing around that, too. The second is, since I spent a lot of time criticizing the president, I want to highlight one thing he said in the speech that I was hugely in favor of, which is, for national security reasons, the American shipbuilding industry's sort of current state is a disaster, and saying this is something we need to fix is extraordinarily critical. The problem here, and this is, I think, where the Democratic response will materialize, is to fix problems like that, what you need are the same federal bureaucrats who have been traumatized and forced out of office by the Trump White House. So I suspect a lot of the Democratic response is going to focus in on, it's not that we disagree with what you're trying to do, it's that you're completely incapable of doing it. Gautam,
thank you so much. Gautam Mukunda, Yale University, there on the state of our nation's politics. Can't say enough about his book, Picking Presidents. David Gura out with a tweet. I think this is important and really captures what we were talking to Terry Haines about. Quote, President Trump cautions farmers that with his tariffs on agriculture, there, quote, may be a little bit of an adjustment period. We'll have to see on that. The markets adjust. I've got red on the screen now for the first time this morning. A little bit of green up and then down we go with the Bloomberg Business Flash. Lisa Mateo.
And this Bloomberg Business Flash is brought to you by Oracle. Attention growing businesses. Oracle offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimum financial commitment, offer ends March 31st. You can see if your company qualifies at oracle.com/Bloomberg. And Tom said it, you see futures starting to shift. This is after more economic data pointing to that slowdown in the labor market. Hiring, U.S. companies slowed in February to the lowest pace since July. ADP says private sector payrolls increased by 77,000 in February. We have more data on the way in just a few moments. S&P Global PMI, we have factory durable goods orders, and also the ISM Services Index. Just a reaction now. NASDAQ futures up 0.1%. Dow futures little change, down about 29. S&P futures little change, down about 2. We have the 2-year yield 3.91%, down 7 basis points, and the yield on the 10-year 4.21%, down 3 basis points. That is your Bloomberg Business Flash. Jess and Tom.
Thanks so much. I really appreciate it, Lisa, this morning. It's the good news is, Jess, it's not as hectic as yesterday.
No, I feel like
it's
we're having
still
fun
nuts. I mean, ADP folks under 100,000.
That's right.
We'll have to look for amendments there to what we see for claims, and particularly the jobs report on Friday. I can't tell you how rich the economic data is right now. We're doing the best we can to keep up. It's CNN, Jim Sciutto, who I adore, and also out of Yale, I should point out. They talk to military officials at CNN who say some intelligence to Ukraine has been diminished in some way. We'll get more on that. It's moving. A senior U.S. military official tells CNN the U.S. has curtailed some intelligence sharing with Ukraine. And again, that's a movable story this morning. It's time for Certitude. Let's go to quantitative finance. George Patterson is with PGIM with some great leadership there in Quant Solutions, and we welcome him this morning. George, up on the back end of the equation, on the right side is this goofy epsilon. It's like an E that my mother wrote. What's the epsilon look like this morning? I mean, can you make a bet, or is there just too much uncertainty?
Good morning, Tom. Yes, epsilon is usually meant to represent what we can't predict. But in all honesty, I think the challenge right now is just the uncertainty. As you know, uncertainty causes people to put a lot of things on hold.
It puts things on hold. Let's bring it over to macroeconomics away from your preview. If you're sitting down with PGIM economists or your clients, do you just assume a dampened economy because of not risk measurement? Good morning, Peter, the late great Peter Bernstein. But do we see here legit uncertainty which leads to dampened GDP?
I think the real question is how long the tariffs and just the back and forth with tariffs are really going to continue. And if it's a short period of time, it's likely going to be moderate in terms of impact. But longer term, I think you do start putting CapEx on hold. You do start having consumers say, maybe I'm not going to spend a little bit more on something. And I think right now the consumer is reasonably healthy. But I think if this goes on for a long time, I think we could definitely start seeing those earnings estimates come down even more.
And what's textbook there, Jess Menton, and this is what you get. I mean, if you're doing physics at MIT, you go to the x-axis. Now, we're not going to ask George on a Wednesday to go to logarithmic x-axis. That would be too much. But this is the key thing, folks. It's the denominator, dt of the dynamics. And the answer is we don't know the x-axis, Jess Menton.
Well, I was just looking, George, at the Bloomberg intelligence model where we track the earnings expectations. And of course, as you know, investors look out at least a year or more. And so those 2026 expectations for earnings growth for the S&P 500 still tracking at 14%, even though we've seen it come in a little bit for this year. So we're not seeing that just yet for next year. So where do you think we're going to start to begin to see weakness? Because even if those growth expectations for this year are around 10% for EPS, I mean, that still seems pretty strong.
It is still pretty strong. Like everything, you've got to look at the delta, right? I mean, what's the rate of change? And earnings estimates historically they're much more optimistic as you go further out, and as you get in closer, then that's when they tend to get revised. This isn't going to play out immediately. It's not going to happen in the next week or so, but it's definitely going to play out over the next few months. If there continue to be hiccups, not hiccups, but if there continue to be tariffs, if our policy is just uncertain, it's going to cause people to put decisions on hold. If you're building a plant, if you're making a big decision, you need more than a few years visibility, because whatever you're building is going to be there for 20 years. So, the short-term uncertainty really can cause things to slow down.
George, too short a visit. Let's do this again. I need you and Porcelli. You got to come in. George Patterson and Tom Porcelli in the studio would be lights out.
Oh, absolutely.
Lightning
in a bottle.
Even better. Maybe they're on speaking terms. George Patterson with PGIM. Thank you so much there on the dynamics that we see in this market. Our economic indicators here on a Wednesday, Thursday claims, Friday the jobs report, brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with a 2-to-1 advisor to staff ratio, small firm attentiveness, big advisor impact. Go to commonwealth.com to learn about their consultative support and technology. Jess, futures give way. I mean, I'm not going to say it was Lutnick. It's got to be ADP more, but the answer is futures give way.
Yeah, they did move more when that ADP came out at around 8:15. Coming off, it did hit session lows, but the S&P futures are a little bit higher now, about 0.1%, Tom.
Stay with us. We're on YouTube, our new digital medium. Subscribe to Bloomberg Podcasts out at YouTube. From New York City, this is Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got futures starting to pull back, and this is after more economic data pointing to a slowdown in the labor market. Also, after Commerce Secretary Howard Lutnick told Bloomberg President Trump may consider giving some tariff relief with an announcement possibly later this afternoon. Let's get to NASDAQ futures. That's where we're seeing a bit of a lift, up only about 0.1%, 37 points. Dow futures are a little changed. They're down 23. S&P futures are a little changed, up just a fraction. The 2-year yield, 3.91%. That's down 7 basis points. And the yield on the 10-year, 4.20%, and that's down 3 basis points. To commodities, we have Brent crude $69 a barrel, WTI crude $66 a barrel. We move over to gold, COMEX gold $2,919 an ounce. I have to point out the Bloomberg Dollar Spot Index down about 0.5%. I want to stick with tariffs. We were just mentioning that yesterday. Automakers really took a hit because of it. This morning, a little bit of a rebound. We have Ford up 2%, General Motors up 5%, Stellantis up 7%. Tesla set to bounce back from yesterday's 4-month drop. Shares up about 1%. We also have shares of chip makers, other companies tied to AI on the rise. NVIDIA, Broadcom, Micron, all up more than 1%. That is your Bloomberg Business Flash. Paul and Jess.
Lisa, thanks so much. Paul and Jess is here. Good morning. That's okay. You okay over there? Thank God it wasn't Biden data. It was Mateo data. Paul Sweeney and Alex Steele later today. Bloomberg Invest downtown. Right now, I'm privileged to have Jess Menton with us. Lisa Hornby's wonderful. She's with Schroders, head of fixed income. And what's so fascinating is every time she's on, I'm like, get her on longer. Get her on longer. So let's get right to it with Lisa Hornby. You've got a great couple sentences here. This is typical Schroders. I mean, they go back to the 17th century or something. The 10-year rolling return on long U.S. Treasuries has turned negative. Price down, yield up. Do we have enough of a seismic shift now, Lisa Hornby, to get us to a price up, yield down trend?
Well, we wrote that in early February, and we've had quite a rally since then.
I'll say.
I think it's a multi-year rolling number, so it's probably not enough to turn it positive. But I suppose it gives you an element or a sense of the sentiment against the Treasury market over the last several years. It's not been a great ride, especially in long Treasuries. But I do think that there are some structural shifts on the horizon that may change that narrative. And the fact that everybody 6 weeks or 10 weeks ago at the start of the year thought yields were going to the moon in the U.S. I think that some of that sentiment has changed, and probably there was a fair amount of positioning off balance as well.
Schroders goes back to 1804. Back then there was it's like French 50-year pieces. There was long duration, including this strange word perpetuity, which Americans don't know. Lisa Hornby, just as clear as I can, do we need to extend duration in this new world?
So we've had a pretty significant rally. We're still biased towards long duration. However, we have moderated the sizing of that position. There is a lot of uncertainty on the horizon. I think we're in for a bit of a wild ride for the next few years. And so that means there's going to be periods where we can fade sentiment. And, going back 6 or 8 weeks ago, everybody thought 10 years were going to 5.5%. That was one example of a fairly almost easy fade. Now that we're closer to 4.25%, it's harder to say. Again, we're still biased long, but we've moderated the size of that positioning.
So when you're speaking with your clients, where within the fixed income universe are you advising them to position? What should they buy? What should they sell?
Yeah, that's a great question. We have biased our portfolios much more towards structured products in the last year or so. You know, when we think about credit risk remote products like agency mortgage-backed securities, they look very attractive to us on a fundamental basis, on a valuation basis, and also from a supply and demand basis. You know, we've seen the biggest buyers of the agency mortgage universe shift away from that market. That was the Fed, that was the US banks. And we think that there's scope for at least the banks to return. We've seen some evidence that they're already returning. I think there's scope for more of that, particularly if there is some deregulation and capital freed up on the banking side over the next year or so.
What are credit spreads telling us about the economy?
So look, credit spreads touched basically 20-year tights a few weeks back. In our view, you know, we were part of the reason for the shift to structured and away from credit was because spreads were too tight. There are clearly segments of the market that still make sense. There's some issuers that fundamentally make a lot of sense. But for us, risk reward, when you get down to those very tight levels, it's a harder argument to make to be invested in corporate credit by and large. That being said, all-in yields being high kept demand elevated, keeps those spreads robust. And I would say, generally speaking, outside of certain industries, you know, the corporate market is fundamentally well supported. The question here is, are you being paid enough in terms of that risk premium to take credit risk?
Folks, tattoo it to your brain. I can't say how unusual Lisa Hornby's comments are, where she looks at the 10-year visibility of price down, yield up in bonds. She's one of the few to address that. Head of U.S. multi-sector fixed income at Schroders. Lisa, don't be a stranger. Thank you so much. Speaking of strangers, he hasn't been on for at least 20 minutes. The news today, fascinating. With our news in New York City, Michael Barr.
Jess, Lisa, thank you very much. President Trump's address to a joint session of Congress began with a bold statement, America is back. We got reaction with Lindsay Newman, geopolitical risk columnist at G0 Media.
The message is that Trump is full steam ahead, and that's what stood out for me. You know, he said in his own words, the agenda has been swift and unrelenting. I can confirm, as somebody who analyzes his moves, that is absolutely correct. And his administration is just getting started.
Lindsay Newman of G0 Media. In his 100-minute speech, Trump defended his plan to remake the world's largest economy through the biggest tariff increases in a century.
Our farmers, starting on April 2nd, it may be a little bit of an adjustment period. We had that before when I made the deal with China, $50 billion of purchases, and I said, just bear with me, and they did. They did. Probably have to bear with me again.
He also hammered topics like transgender rights, migrant crime and diversity, equity and inclusion, and said relatively little about consumer prices. Senator Alyssa Slotkin of Michigan delivered the Democratic response.
His tariffs on allies like Canada will raise prices on energy, lumber, and cars, and start a trade war that will hurt manufacturing and farmers.
Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Jess, Lisa.
Michael Barr, thanks so much. Joining us now, surveillance. Is there a college student that doesn't want to go to Dublin? Correspondent Manus Craddy joins us. Manus, there's tons of American dollars in Ireland. We all know the tax thing in that. Give us your update on Trump tariffs and what it means for Ireland.
Look, tariffs for Europe, and then you break that down. Auto industry, technology industry, and tax. And in the end of the day, my understanding is that a lot of our tax issues in the Republic of Ireland have already been resolved, the Apple case. However, the bigger, broader aspect is Trump and Europe and regulation and litigation. Litigation against the big tech players. And there are some of the major tech players present, you're quite right, Tom, in the Republic of Ireland. They have been the bulwark of the economic success, the alpha of the property market driver, and absolutely the delta of this economy.
This came up at the dining room table last night. Mrs.
You didn't invite me for dinner.
Mrs. Keene goes, I want to roll like Manus. In Dublin, a $1.5 million New York property is popping $4 million. Where's all that money coming from into Dublin? They're not chasing after Bono, are they?
They're not chasing after it. Bono apparently still goes to the nightclub I used to go to in the 1990s, so don't worry about Bono.
Really? Such a stud. I can't keep
You
up.
see.
What about real estate in
The
Dublin?
real estate
It's nuts.
is incredibly... They have a supply constraint issue. Very much like New York, where supply is limited. I mean, think about me. I came from the Middle East. I pay 50% more rent to have a 50% smaller apartment.
You're loving it here.
I'm loving it. And you know what, Tom? Paying 50% more tax. I mean, it is the ultimate dream. But from a slightly more serious point of view, it's a very serious social and political issue in the Republic of Ireland in terms of housing. It was a very contentious issue in the budget. And I should say that the budget in the Republic of Ireland is actually blowing up and higher in terms of revenue. And that revenue comes from some of those monies that were taken and set aside as a result of some of the tax cases.
Manus, thank you so much. Manus Kearney on short notice here this morning, leading our coverage out of New York in the early hours of the morning. I used to do that gig. It's like 50% more rent, 50% less fun, bonus round. Manus is rocking it at 2 a.m. getting ready for the show. Manus Kearney, thank you so much for joining us. This is serious stuff, folks. I mean, these dynamics on tariffs are the real deal. We had an up market when Jess Menton darkened the door. It's 6:59:20. Markets give way. It's Bloomberg's surveillance.
You're listening to Bloomberg Surveillance with Tom Keene and Paul Sweeney on Bloomberg Radio.
Good morning, everyone. Joe Weisenthal, Jess Menton here for Paul Sweeney, Paul and Alex downtown at Bloomberg Invest. Joe Weisenthal, and he survived an interview with Ray Dalio. Ray gets rambunctious.
He's
with
fun.
odd got huge responses always.
That's right.
What was the Dalio distinction this time around?
Well, you know, he's been warning about debt cycles for a long time and the end of debt cycles. And if you read a lot of his books and say writing on LinkedIn or his website, you see it. He said 1 to 3 years. He was very clear on this, that there is now a ticking clock of 1
Jess,
to 3
it's
years.
early for Joe. He shut down a bar in Brooklyn last night
That's
at
right.
2 a.m. Continue.
There's a ticking clock, and he says they have to get to 3% GDP, and that without getting down, or 3% deficit to GDP, and without getting to that, we're going to have
He's been
some
saying
version.
this for years.
He has been, and now he's putting a timer on it.
Why now?
Because the rise in interest rates, which is caused by the rise in inflation, is creating essentially this new category of spending, which is the coupon payments. And so, you know, we don't really think, when we think about the budget, right, we think about like, okay, there's going to be some inflationary impulse from defense spending. There's the civil service, et cetera. There is this other growing category that has grown as a result of the rate hikes called coupon payments, and he believes this is where the source of the risk rise, because you're starting to get all of this more spending into the economy, which could potentially compound.
I'm in Jackson Hole. I'm working on the fourth martini, and Stalwart sits down. Joe Weisenthal sits down and says, we're blowing up the newsletter, and I love it. Here's what Tracy is watching. Here's what Joe is watching. You go to my Economist of the Year 2 years ago, the optimist Neil Dutta. He's not.
Very fun. We have this new newsletter at Odd Lots that anyone can sign up for. And we have guest contributors. So people who've been on our show, we let them write it for a day and let Tracy and I take the day off and be lazy. But he's been very optimistic for the last couple years and faded every call for a downturn. And right now, he says there are three things: state and local retrenchment due to declining tax revenues, the slowing housing market at this point, because rates have been so high for so long, we're exhausting all the backlog. And so that means a decline in residential construction, and then just an aggregate slowing of real incomes. And he thinks the downside risks are building to the economy. And this is before, mind you, any macro impacts from DOGE or tariffs.
Of course, when it comes to Tom Keene's favorite topic, Bitcoin, what do you have to say about that?
So Ray likes Bitcoin. He doesn't like it as much as gold. I don't know how many times he mentioned gold, 15, I don't know, something like that. He probably mentioned Bitcoin, though, like 4 or 5 times, and he said, like, he's not as into it as he is gold, but that it has properties of a reserve asset. And he said that, you know, something that people talk about is the idea of, like, well, could the Trump administration massively weaken the dollar to improve the global competitiveness of U.S. manufacturers? And so they harken back to the Plaza Accord, things like that. His argument is it won't work. If there's any weakening of the dollar, it'll be against real assets, and so he likes gold and Bitcoin.
Pearl out on Twitter. Light sweet crude holding it down at the 11th Street bar.
Yeah.
Joe is like a middle-aged Dwight Yoakam,
That's
but
right.
more handsome.
That's right. Many people say that.
They say that.
Yeah.
Which era of Dwight Yoakam are we talking about?
Oh, I probably I don't know. I would imagine the 70s when he was like hanging out in the LA punk scene, trying to do country and punk clubs in LA. I think that's that's what, when people look at me, I think that's what they see.
They do. I mean, like the south of Cincinnati era.
Yeah, that's right.
The guitars and Cadillacs.
Yeah.
Okay.
You know, Tom Keene, we went to rival universities.
I noticed that. Texas didn't beat Auburn. Texas A&M beat Auburn.
That's right.
Well, we beat Texas A&M.
Can you work on it and just bring back, please, bring back the Thanksgiving football game every year?
We're working on it.
Canuck.
Well, we're all working on it.
We're working on it.
You're working on it. Okay. Yeah. Odd Lots. I can't say enough about it, folks. Out on Bloomberg Podcast. Check out Light Sweet Crude. Their summer tour really coming to shape. So some beer sponsor, and I can't remember which. And Joe Weisenthal promises they will play ZZ Top. They're looking at that right now.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
The president wants lower interest rates from Chairman Powell.
You can make the argument that this is a really rich market.
With Lisa Mateo on markets.
Stocks are coming off another record high.
And Michael Barr with news.
President Trump signing a wide range of executive orders.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Michael Barr, Lisa Mateo, Jess Menton in for Paul Sweeney, Paul and Alex downtown, Bloomberg Invest. Good to have Jess Menton in on the equity markets, some of the granularity our team is seeing in this time of tumult. To remind you, early this morning I came in green on the screen, a modest bounce off the carnage yesterday and on Friday, and we give way somewhat because of Howard Lutnick, Secretary of Commerce, with his piercing interview with Jonathan Farrow, but far more ADP coming in a little light, and we went from maybe up 20 down to flat, red on the screen, churning, and all that. We're going to get a readjustment with Brian Belski. We'll do that here in a moment. Bloomberg surveillance across the nation and in Minnesota, brought to you by IBKR, with the average U.S. temperature in February 2025 will exceed 36 degrees Fahrenheit. At IBKR Forecast Trader, the yes was recently 44%. What's your take? Trade your prediction at ibkr.com/forecast. Last trading day for this contract is March 9th. Just Menton, what are you working on the desk this morning? I see.
Actually,
what's great about this, folks, is Jess is a worse typer than I am. Most of the real journalism people, they can type 400 words a minute, like Lisa Mateo, and be looking at Red Sox baseball. You're hunting peck, aren't you?
No, I am. So actually, I have a story coming out pretty soon. So it's about
You're
how
ignoring me.
it's about how how I was telling you implied correlations are picking up. So I was actually looking at how in the shorter term what that means for the market, but also if you look at it from a 1-month basis ratio versus a 3-month, it's at the highest since going back to 2009. So that tells you that hedging demand is also in volatilities more in the shorter term type peak, not a longer term phenomenon.
Everybody's playing. Are the hedge funds getting crushed here? I saw some hedge fund out in Bloomberg. Are hedge funds getting crushed?
Actually, yes. I was talking to some hedge fund managers yesterday about this because of the market dynamics with things flipping around. They were having to cover some of their shorts yesterday.
Jess Menton with us here, and we have a good conversation coming up. Let's get right to it right now with the Bloomberg Business Flash from Interactive Brokers. Lisa Mateo.
And we've got stock futures kind of giving up those earlier gains, weak employment data. Tom was just talking about the ADP payrolls. They increased 77,000 in February. We also had concerns about Donald Trump's trade tariffs. So add all that together, and you have NASDAQ futures, little change, Dow futures, little change, and S&P futures, same there. We have the 2-year yield, 3.89%, down 9 basis points. The yield on the 10-year, 4.19%, and that's down 4 basis points. We go to currencies. The Bloomberg Dollar Spot Index down about 0.6% because of the news flow. Let's go to the Mexican peso, up 0.5%. We have the Canadian dollar, little change. We go to the euro, up about 0.8% at 107.17 against the dollar. We do have a rebound in Bitcoin, up more than 2% at just over 89,000. To earnings we go. We'll start with CrowdStrike. Their shares down 6%. Gave a disappointing earnings outlook. That's the reason for that. And then we go to Ross Stores. Their shares down about 1%. The company took this cautious approach in its sales forecast. And finally, Bayer forecast third straight year of falling profit. But here's the thing, fourth quarter sales beat. That boosted the stock, so its shares are up about 1% in Germany. That is your Bloomberg Business Flash. Jess and Tom.
A single headline out. It's just hours after the State of the Union. Supreme Court rejects President Trump on U.S. foreign aid freeze. That's all I got right now. We'll bring you more on that. The United States Supreme Court rejects the president on U.S. foreign aid freeze. Anticipated, someone who's absolutely nailed this bull market, Brian Belski, joins from BMO right now. Have you adjusted your call?
Wow. No. I mean, as I stand here next to a Red Sox fan.
Excuse me, can we notice, Lisa, how tanned and rested he is? Everybody else in here looks like a pasty puke.
You know, it's all about the deep sleep at night, Tom, and I get that hotel room down to about 60 degrees.
Great. Where are we right now? Have you made an adjustment?
No, we haven't. In fact, we're sticking behind our 6,700 target. And remember, we put our piece out for the year ahead November 18th. Typically and historically during an election year, we do it right away after the election, as soon as possible. And a lot of, quite frankly, strategists that have been late to the game in terms of entering this bull market have much higher targets than us because they publish after, and that's okay. Welcome to the party. I'll just pull the great Ricky Bobby and say, if you ain't first, you're last. You know, we've been bullish and resolutely bullish since 2009. It's in record, it's published, and all of that. But I think what's happening is that this is a return to normalcy. Many people don't understand that, but we've had several shots across the bow. I think that momentum investing is changing into fundamental investing. I heard JSE is a friend. I just can't help myself. I just had to do that. Talk about correlations. Correlations short term, yeah, are certainly doing that. And that's why the hedge funds are getting crushed. And that's fantastic news as far as I'm concerned, because they're the ones that are causing a lot of the noise. And they don't invest. They trade and they follow everybody else. So if you're an investor, you want to be more fundamental, more stock picking, and the correlations are actually very low, which means you actually want to be a stock picker.
Right. So those correlations have actually been hovering around their lowest level on record. If you look at the SIBO indicator over the 3-month time frame, so they've spiked up close to where the highest they've been in early September. So coming off of the heels of the yen carry trade unwinding, and also the worst week of the year in 2024. So in relation, still low compared to history, but spiking a bit higher now when things were a little bit more volatile at certain points last year. So that 6,700 price target, that's actually implying a 16% rise for the end of the year based on yesterday's close. So what do you think would need to change in the economy, in the view for corporate earnings, for you to adjust your target in any way?
Well, first off, there's been this rhetoric that earnings have changed. They haven't changed. In fact, earnings have actually continued to improve over the last 2 or 3 months.
And actually, 2026, you still have 14% earnings growth for the S&P 500.
Yes, we do. And I think actually, Jess, that could be too low. And I think why that's too low is you have an increasing amount of companies in the technology space, discretionary space, communication services space that are taking the mantle in terms of leadership away from the Mag 7 in terms of earnings growth. That's number one. Number two, I do believe that earnings and financials are consistently and way understated. And I think we can get a lot of kiss there in terms of the upside.
What's the risk to your target?
Risk of the target, quite frankly, is more on the inflationary side in our view. It's been a little bit stickier. I think that could be the biggest issue. And I think too, Tommy and I have been talking about this for years. I mean, the whole focus on Fed funds futures and all this kind of stuff. I mean, let's just stop focusing on that. Let's just look more at what's happening in the underlying parts of the stock market.
Yeah, I'm looking here. I mean, Ari, help me here. Who got buried by the Minnesota Vikings?
Here we go.
Sam Darnold. They just said, "See ya." I mean, they just didn't give him the deal.
Bye. Listen,
they didn't.
If you look at his eyes, right? Okay, look into his eyes, brother. The last
Lisa,
game.
if I ever do this to you, Lisa, if I ever do this to you, it's an HR violation.
Oh my God!
I'm going to be at
It makes me
JetBlue
think of
later.
like
I'm going
Robert
to
De
be at
Niro
JetBlue
and Meet
this
the
weekend
Parents.
to see the SWACs in
Right.
Fort Myers. Anyway, look into his eyes versus the Lions, and then look into his eyes during the playoff game. He was not there, man.
Right.
He was not there.
Okay, you mentioned Ricky Bobby. Are your kids as well managed as Texas Ranger?
You know, listen. Last night, I think my daughter had some delicious Taco Bell, but she also informed me this morning in St. Bonifacius, Minnesota, they got 5 inches of snow. They got 10 inches of snow in Lakeville, Minnesota.
Yeah. Okay, in Duluth, they got snow as well. I noticed Duluth exports to Canada. Their second largest exports to Algeria. It's iron ore. It's like real people. I spent some time with those people. You're giving me optimism on America, and I'm looking at Duluth, Minnesota crushed on tariffs. How can you have the two?
Well, another thing about Duluth, Minnesota, you know that Duluth, Minnesota has the largest Polish cemetery in the world outside of Poland. Did you know that?
I did not know.
So you know it
Learning
now.
every day.
Listen, I think that there's different things going on in terms of Duluth and in Minnesota in particular, because you have the North and the South, which are dominated by mining up north and farming in the South, which obviously you heard the president's address with respect to the farmers. But in terms of the North, it's been kind of more of a mixed picture. And there is still a lot of, obviously, back and forth trade between, let's call it Duluth and Thunder Bay, Ontario, if you know your geography. But I do think that Minnesota, given the massive amounts of state GDP that is tied to Ontario in particular, this is actually more emotional with respect to Minnesota. But obviously, you've heard with respect to some of the news, who knows how long these tariffs are going to be. You know,
that's the key thing.
Your
x-axis.
Here's the way I want you to think about this, Tom.
Okay.
This will be in your knowledge. I don't know much about fixed income, but in terms of bonds, it's all about duration and convexity, right? So let's talk about the duration of tariffs. How long? They could be gone today. I mean, that's the risk.
Gautam Mukunda of Yale was just on and said the same thing. We had from PGIM, their leading quant analyst. He said the same thing, MIT Physics. And I'm sure Ian Lingen would say the same thing. Folks, the x-axis right now, the media doesn't look at the timeline. And Professor Belski is correct. It's all about the length. And you get to optimism like Belski when you believe the timeline is shorter. The leader of Mexico, Sheinbaum, is out now. If tariffs continue, Mexico will reach out to Canada.
Well, we've been talking so much about the Midwest, Middle America here.
Do you want to get something in here right now?
I do.
Have you seen Talladega Nights?
Of course I have.
Thank you. Okay, you can continue.
Are you going to say with all due respect, Belski?
No. Pete, that hasn't made. No, not at all. I was going to pick your brain on, obviously, when it comes to the beige book, I mean, that's never really market moving here, but I feel like it's going to be more closely watched now. Obviously, it's going to be a little bit more backward looking, but when it comes to the different districts, and particularly in the Midwest or other regions, what kind of sticks out to you, and what kind of indicators within those types of reports do you keep a close eye on?
You know, where we're seeing the most economic and population growth is clearly those areas that are more more tax friendly. So the Southeast, or even Texas and Tennessee and some of those areas. So if we're going to see weakness in those areas, I think that would be telling on that. Number one. Number two, again, macro data I've always had an issue with historically. You know, you mentioned MIT PhD. I'm from St. Cloud State University. I mean, there's not much difference between that, quite frankly. But, you know, it is what happened yesterday. And I think we have to remind ourselves that stocks lead earnings, which lead the economy. And oh, by the way, stocks are leading indicators, and they've kind of told us what's happening. And so, are we seeing a slowdown? You asked me earlier what the risk is. If we slow down too much, right, and we're throwing these tariffs, which again, duration and convexity, and we still have this mixed inflation picture, that kind of puts in a more of a muddle type market scenario.
Serious question, parse stagflation versus a lesser but still buoyant nominal GDP that keeps American business going.
Yeah, I think the stagflation argument has become increasingly, let's call it consensus. I think what's happening, let's go back to the normalcy side of things. When Tom was at Rauscher Pierce and I was at a place called Dane Bosworth, we had these periods in the mid-90s where we had kind of low single-digit GDP, 5%, 4 to 5% 10-year treasuries. Remember that, Tommy? Yeah. And 10% earnings growth. I think that's kind of where we're going. Shocked. And I think we just don't know what normal is because we think that normal is 0% interest rates and all these wild moves in the market.
In the modern day, you don't know it, folks, but Minnesota was a massive, and this was off of IDS and all, a huge financial component. And a good morning to all up in the northwest of Piper Jaffray and Dane Bosworth from years ago. It was really something. And the Canadians came in and said, these are the smartest guys in the block. Let's buy them. And that's how you get RBC and BMO, Bank of Montreal, into it. We're with Brian Belski with his optimism on the equity markets. A little red on the screen. We've given it back off ADP into the jobs report on Friday. Jess Menton to Brian Belski.
So the past 2 years, of course, the boom in the markets, adding $18 trillion to the market cap for the S&P 500, up close to 50% for the past 2 years. So the third year in the bull market, typically you do see those gains slow down throughout history. But of course, when you have such a strong run, does this make sense where we're at in the calendar? And especially when you think about the presidential cycle, typically weaker at this point in the first quarter post-election.
100%. You typically, in especially February and March, have weaker seasonality. Because the platforms are coming out and people are reacting to what's happening and actually typically seeing things be put to work. Now, clearly in the last 42 or 43 days, we haven't seen this kind of flurry of activity that President Trump's been doing. But at the end of the day, if you kind of take 2 steps back, Jess, and think about what's happened the last couple of years, 2023 was really an overreaction to tech being massively oversold. Remember the first 2 or 3 weeks, you were crazy writing about these massive
the mean reversion debate,
in big technology names. And then 2024 was, oh my gosh, AI is actually real. And we are not invested there. So then now you started to see this notion. I really believe the broadening out trade is happening. I really believe it. And you've seen how value is massively outperformed. Some of that is the defensive trade into healthcare. We think that's less fundamental and more about momentum into defense. But we think ultimately true value stocks, small mid cap. I think 10 years from now, Tom, we're going to be looking back. How come we didn't buy more small mid cap?
I mean, I look at this, and the heart of the matter, Brian, and we've all lived this, is a really down market's negative 35%.
Yeah.
A bear market, Dow Jones Industrial Average, is negative 18%. And a normal, healthy correction is 10%. In the Ute of America, they've never experienced it. We're down 6% blended. And it's like people are in a panic. I'm like, I don't get it.
Well, exactly. And you think about year to date, we're basically flat and we're acting like we're down 20 to 25%. And I think that comes to the reactive nature of investors, which was exacerbated during COVID. I actually think all this stuff started
I agree.
I think all of this stuff started during the financial crisis. And then obviously that was much more near and dear to New York and our hearts in terms of the financial world, in terms of our jobs and everything. But that really kicked things off.
Sharma has this as his book, likely my book of the year. And basically we've become addicted to let's fix it so everyone's happy.
Yeah.
That's the heart of the matter.
It is. It really is.
Okay. And I got to ask you, Michael Barr just came in. One final question here. The Vikings have blown up because Sam Sia. Do the Lions look good this year? I mean, I think,
the lines look good. The lines look good.
They've improved.
I was rooting for them. I really wanted to see the Lions and the Bills in the Super Bowl.
Yes, we agree on that.
But now that the Bears have their offensive coordinator, that was a huge loss. And the Bears have a real coach. Now, whether or not they have the right quarterback there, who knows? But I think the NFC North, man, is going to be really, really competitive again.
I mean, Caleb to the rescue, right?
Well, we'll see. We'll see
We'll
what happens.
see.
JJ to the rescue with the
This is
Vikings.
good.
Let's go.
Okay, Lisa, would you check to be sure Michael Barr's medicated? Brian Belski, thank you so
Thank
much.
you.
BMO Capital Markets. I can't say enough the linkage between Gautam Mukunda of Yale and Brian Belski at BMO Capital Markets. Folks, study the x-axis. Number one advice this morning. Also, is Barr okay? Can he do this, Lisa?
I think so.
We got it. Okay.
I think we got him back.
Positive comments on the Detroit Lions. With our news in New York City, Michael Barr.
You have Mr. Belski on often. I appreciate that. President Donald Trump vowed to keep up his campaign of swift and unrelenting action in reorienting the nation's economy and foreign policy as he delivered his address last night to Congress and the nation. Among defending tariffs against Canada and Mexico, the president also addressed his mass deportation plan.
Protect our homeland and complete the largest deportation operation in American history.
Afterward, Senator Alyssa Slotkin delivered the Democratic rebuttal, calling Trump's speech a series of mischaracterizations and contradictions.
He believes in cozying up to dictators like Vladimir Putin and kicking our friends like the Canadians in the teeth.
Today, Elon Musk is meeting behind closed doors with House Republicans the day after President Trump praised the billionaire's government cost-cutting effort in his speech to Congress. Democrats blasted it on the House floor and in their rebuttal. Bloomberg government's Jack Fitzpatrick has more from Washington.
That is a consistent drumbeat from Democrats as they focus especially on economic criticisms of the president, the role of Elon Musk, the chaotic means of freezing federal funding, trying to let go of federal workers. That's been a consistent theme from Democrats, and you heard it from Senator Alyssa Slotkin from Michigan.
Bloomberg government's Jack Fitzpatrick says Democratic Senator Slotkin accused Trump of planning to target Social Security for cuts. Just recently, the Supreme Court has made a ruling about U.S. aid. They have decided that they are going to not freeze what they want for President Trump to do. He wanted to keep the money, but they said, no, you have to pay it back. From Louisiana to Oklahoma, severe weather, including tornadoes, ripped through the south, killing at least 2 people in Mississippi. Entire homes were destroyed by winds. A twister with 105-mile-per-hour winds hit the town of Ada, ripping the roof off an elementary school. Mardi Gras revelers in New Orleans braced the strong winds of up to 80 miles per hour. Global news, 24 hours a day, and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Jess, and Lisa.
Thank you, Michael Barr. I am advantaged by Tom Secunda's support at Bloomberg to aggregate news. David out on Twitter, thank you so much for driving the conversation to me this morning. From the CBC in Canada, Darren Major out with an absolutely blistering report 5 months ago, and it's just real simple, and this is some of the tension that we saw in the joint session last night. Let me quote the first sentence. Organized crime of Canada, the groups have shifted their efforts away from importing the deadly synthetic opioid fentanyl and are now producing it primarily on Canadian soil. Some of the nuances there that you heard from the Secretary of Commerce with Jonathan Farrow earlier with his focus on opioid and like where's it made and what are we doing in terms of simplistic ideas about it's from here, it's from there. In this case, CBC saying so much of it is Canadian derived. David out on Twitter, thank you so much for forwarding that important journalism from CBC to me. I've got red on the screen right now, the VIX 23.88, a lesser tape than 2 hours ago. Bloomberg surveillance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this futures report sponsored by IBKR. Will the U.S. CPI exceed 2.4% in March 2025? You can trade your prediction with IBKR Forecast Trader. The yes recently at 60%. Buy yes or no and earn $1 if you're right. Go to IBKR.com/forecast. Well, you've got little movement in futures after earlier gains. This is following weak employment data that's really starting to weigh on the market. So we have NASDAQ futures up about 0.1%. Dow futures, S&P futures, little changed. The 2-year yield, 3.91%, down 7 basis points. The yield on the 10-year, 4.21%, down 3 basis points. The Bloomberg Dollar Spot Index down about 0.6%. A few companies making news. Sources say Google urging DOJ officials to back away from a push to break up the company. They're pointing to national security concerns. Then you have Microsoft. They're warning Chinese hackers known as Silk Typhoon. They're spying on cloud technology to hunt for details on U.S. policy. Elon Musk bid to block Sam Altman from restructuring OpenAI. Well, that will be expedited for a trial in the fall of this year. And we've been talking so much about tariffs, the president's address to Congress, but something else from last night that's getting some attention is what the First Lady was wearing. Yes, Melania Trump sporting a $5,500 Dior blazer, removable scarf, matching shirt. Fashionistas are calling it a, quote, quiet authority. That is your Bloomberg Business Flash.
Yes. Do we have any idea? Well, Brent Schuette's laughing at you, Lisa. He's like, are you kidding me, Dior in Milwaukee? I'm afraid to ask, what bag was she toting last night?
The bag is still undisclosed. Yes, we don't know yet. But the $5,500 blazer, we do, yes.
Karen Tumulty, The Washington Post, the Oscars are on. She tweets, she's glorious. Yeah. She tweets out, I'm wearing Land's End.
Beautiful.
Good morning to Karen Tumulty at the Washington Post. This is important. Brent Schuette was with us last time. We had breaking news and had to keep it short. We're going to get squeeze every minute we can out of this with Brent Schuette of Northwestern Mutual. Brent, you're going to tell me that Northwestern Mutual is in it for the long haul, but the fact is, a set of clients are terrified, whatever their politics, by the new volatility. How do you manage volatility for the long haul?
You diversify. You don't concentrate in any one segment of the market. Look, this is what I always hear from the clients is that it's highly uncertain right now, and so therefore I should do X, Y, and Z, which usually is go to cash or concentrate and hide somewhere. To me, that is admitting that you think you know what's going to happen, which, as I think you're kind of referencing, right now there are lots of moving variables, lots of moving parts that change minute by minute, which I think means you need to diversify, stretch your time horizon, and focus on diversification and things that are currently cheap and out of favor, because at least in the past, and I've said this before, possibly on the show, asset classes don't die, they just go to sleep for a while. And so typically that changes when the narrative changes, and that's what I think you're seeing right now. For example, in Europe, you're seeing increased spending, which has driven European stocks higher. There certainly is a change, a shift in the air right now, which I think could serve to shift asset classes and their performance moving forward.
So when you're talking about diversification, are you going and broadening out your diversification to equities in, say, Europe as well as China?
I mean, we certainly have been broad. We always advocate diversification, and I think people need to understand that means that something in your portfolio won't be performing well, and diversification can be a cost. I've heard you call it diversification. Hopefully not. But that's where it doesn't pay consistently, but when it pays, it makes up for those time periods, especially at big changing points and turning points. Like, I feel this has a lot of reminiscence to the 1998, 1999 time period, where people wanted to concentrate in particular segments of the market. And the next 6-7 years was completely different. You kind of think back to 2010, no one wanted to own U.S. stocks. They wanted to own emerging markets in China, and that was a big shift. And so at least have some humility and make sure that you stay diversified. I do think the markets need to broaden out and the economy needs to broaden out to keep us going. Certainly 2024 was an up year in markets, but it was driven by a narrow group of stocks, which are currently seeing a bit of a pause in their performance, meaning something else needs to pick up the slack to keep us moving higher.
So when you're speaking with your clients, what are their top questions right now?
Well, I think it's going to be all about tariffs and more about politics. And so what happens there? How does this all fit together? Which I think everyone's asking that same question. I don't know that anybody knows for certain. which kind of brings me back to that diversification comment. Look, there are a lot of things that are being thrown at us. I think there was an economy that was already bifurcated, meaning that there were weak parts of the economy, there were strong parts of the economy. I think the question people are asking right now is what happens in the next few weeks. Are we having a growth scare, and does that growth scare become real?
The idea that we have a company turned upside down, again, whatever anybody's politics, I just want to remove that out of the debate. But Brent Schutte, the basic idea that, well, let me do this. Let me get the market open, and then we're going to come back with Brent Schutte. We're juggling like 3 or 4 things right now. We don't want to short Brent. Brent, let me get the market open here in 20 seconds, and we'll come back with Schutte of Northwestern Mutual. Red and green on the screen, a real disappointment here. ADP numbers came in light with a VIX at 23.95. To get the markets open here, we need Mateo data. And that would be Lisa Mateo. Good morning, Lisa.
Good morning. Yeah, you're right. That weak economic data, also concerns over trade tariffs, so that's weighing on concerns this morning. Let's start with the S&P 500 right now. Little change, down about a point at 5,778. The Dow is little changed as well, down about 15 points, 42,509. And finally, we head over to the NASDAQ, just kicking in this morning, and it's up about 0.1%, 34 points, 18,313. As far as the yield space, the 2-year yield, 3.91%, down 7 basis points. And we have the yield on the 10-year, 4.20%. That's down 4 basis points. We go to commodities. We have spot gold, $2,906 an ounce. We go to Brent crude, down more than 2%, $69 a barrel. WTI crude, $66 a barrel. Finally, the Bloomberg dollar spot index down about 0.7%, and Bitcoin rising up about 2.5% at just above 89,000. That is your opening bell report. Jess and Tom.
Lisa, thanks so much. Brent Schutte with us with Northwestern Mutual. Brent, within a retirement plan like a 401k, there's so many marketing gimmicks, and you are so anti-marketing gimmick. What's the Brent Schutte marketing tone given this national upset on our retirement plans?
I don't know if I completely understand the question, but I think in a 401k, you certainly want to think longer term, because typically that's an asset that you don't use until you're 59 and a half or older. And so I don't know if it's a marketing gimmick or not, but it's more along the lines of stay the course, make sure that you invest.
Like a 60-40, Brent? Or are you talking about, have faith in the growthiness of America? Is there a Brent Schutte angle here that we're making a mistake now we need to avoid?
I think it's based upon your age and how long you're going to need before you need the money. And so certainly if you're in your 20s and 30s and you don't need the money for 20 years, I think the answer would be, a higher preponderance of equities if you have the ability to take that risk, and that you're not going to sell when the stuff hits the fan, which inevitably it almost always does. At least we've had downturns in the markets in the past. That's where I just think it's along those lines. And then making sure that you're not putting your 401k all in one particular segment of the market. I recall people back in 2008, 2009, for example, in Roth IRAs, because it was a longer duration asset, they wanted to put emerging markets in there because it theoretically had the highest return. I'm not for sure that's worked out so well. And so it's making sure that you stay diversified, making sure that you're humble, making sure that you acknowledge that seasons change, market leadership changes, and that no one knows for certain when those are going to occur. But that's the whole thing that we have to acknowledge, and that's the whole reason why you stay diversified. And you stay true to that allocation unless something changes in your life, like you age like I am, and then you start thinking more about retirement, and maybe you add some more fixed income to your portfolio, which now actually has a yield.
He's so old. He's aged.
I just pulled up there's a Bloomberg model 60-40 that can tell you kind of annually how it's performed. So it's flat this year, but it's outperformed in 5 of the past 6 years here. So in this sort of dynamic, when you're starting to see things shift a little bit here, but probably not surprisingly when things cool off in the 3rd year of a bull run, when you're speaking about, kind of broadening out equal weight value, where kind of more specifically within sectors do you see opportunities?
I'm not for sure it's more sector specific. I mean, besides maybe looking at things that haven't worked quite as well, we do like small and mid caps. That's an asset class that we've liked for a bit of time. And that's one that I think when it turns, it will turn pretty aggressively because it is relatively undervalued versus large caps. I think people get impatient with that, and I don't know that anybody can time it perfectly. And so I think if you're looking out 3, 4, 5 years, I think that's where there's opportunities And that's where I think just kind of moving against where the herd is right now is something that's valuable going forward, given the fact that we think things will change and that the market will broaden out in the coming years.
We welcome all of you across the nation. Bloomberg surveillance here on your commute, and also, of course, on YouTube. Stunned at the TV acceptance from your living room, from your office on YouTube. Subscribe to Bloomberg Podcasts out on YouTube. Shocked at how it's growing each day. Major shout out a few days ago, David Weston, in conversation with the Secretary of Treasury of the United States, Mr. Bessent. That was just a huge, huge success for our YouTube distribution, and thank you for that support around the world. Jess Menton with Brent Schutte of Northwestern Mutual.
So, Brent, when it comes to the next round of economic data that's coming out, of course, jobs data on Friday here, what's the most important indicators that you're keeping a close eye on in the short term ahead of the Fed decision on March 19th?
I mean, we get in 26 minutes, we get the ISM services report, which I think people are going to be looking at because that's been the strong part of the economy that's kind of held us up. I know it's more of a sentiment type of survey, which people are discounting right now, but I think that's something that's incredibly important as you think about today. I think certainly the jobs report on Friday, I think the question is the hard data weakening too? Which I think the soft data has weakened. I think you've seen some hard data weaken. You saw retail sales come in weak. That was possibly a payback for a little bit of extra spending that occurred in December. You saw consumer debt increase quite a bit to fund those high retail sales. Perhaps that was in front of tariffs. I think that's another important part. And then I think if you think about today, I think everyone's wondering where that Trump put is. And when Bloomberg started reporting yesterday that the post-Trump election gains had been erased, that's where I think people started wondering, would the president pull back a bit on these tariffs and the threat of those to see if he can keep the market afloat? Because at least in the first term, that's kind of how he judged his success or failure. That was very important to him. I think it's kind of interesting this cycle, this time, it appears to be that 10-year treasury and getting that lower, which is incredibly important given the fact that Scott Bessent wants the 333 plan, which the 3% deficit to GDP. Right now, the interest cost on our debt actually is 3% of GDP, which means that you have to get that lower or in some way, shape, or form to actually allow the deficit to shrink to 3% to GDP or grow GDP faster, I suppose.
Brent, thank you. With Northwestern Mutual, good conversation there with Brent Schutte this morning. Got a number of things we're doing here. We're commercial free with you in this hour. So much news flow, including an important Supreme Court decision. Right now, Regina Mayer joins Global Head of Clients and Markets at KPMG, truly expert on the emotion of Texas oil production, for that matter, global oil production as well. Regina, the phrase I believe from the president is drill, baby, drill. Does Texas, does the Permian, do they want to drill, baby, drill?
I think absolutely. It's been a sentiment that has dominated the industry for a decade. I think drill, baby, drill emanated from the Permian. I think we have to look at what does it really take, though, to drill, baby, drill, and how quickly you can get the production running. What are the economic incentives? I will say with WTI and Brent below 70, where WTI was $80 in mid-January, that doesn't give you a great economic incentive to drill more. And then you have to think about it takes time to find, develop, produce the wells. It's not like you can turn a tap on or off, but it's a positive environment for the industry, absolutely. And the administration is taking steps that the industry welcomes.
So as you know, oilfield service providers and big energy companies used to comprise so much more of the percentage of the top companies in big equity indexes like the S&P 500, but that changed a lot post-housing crisis. And even during Trump's last term, you still didn't see energy companies in aggregate performing that well. You even had Exxon eventually kicked out of the Dow Jones Industrial Average, but has recovered from since then. So what makes this a little bit different, even with oil prices trading around lows?
In terms of the stock prices, I don't know that we'll see huge surges in those valuations. And I do think certain parts of the sector that you mentioned, oilfield services, they're just not going to become the darlings that maybe they were in the past. I think, you know, they're competitive now. They've figured out ways to manage effectively in a very cost-constrained environment. They're coming back into being able to be profitable and seeing growth in their backlogs. But I don't know that it's a basket of investments that will necessarily outperform in amazingly different ways. I do think it's a strong sector to continue to bet in. but I don't know if it's going to be anything like the Super 7 or some of the tech stocks that we're seeing.
When it comes to the outlook for oil and fuel prices, especially when you're thinking about the tariffs on trading partners like Canada in general, who do you think has more of the upper hand here? Is it America or Canada?
Well, I think it depends on what you mean by quote unquote upper hand, but the US imports 4 million barrels per day of crude from Canada. 70% of that is processed in the Midwest. And our refineries are really geared in certain parts of the country to process only that type of crude, heavy, sour, and you can't swap it out. So we definitely will see retail gas prices increase. We're already seeing wholesale gas prices increase in the US Northeast, and we'll likely see retail gasoline prices increase in the Midwest as these tariffs continue. I think the rest of the country will continue to benefit from relatively lower gasoline prices, but for sure, I think we'll see upward pressure. Now, keep in mind, gas prices are even lower than they were a year ago, so we're working with a pretty low base to come up from.
Regina, thank you so much. Too short a visit. Let's do it longer next time. Regina Mayer with us with KPMG on oil. And again, West Texas Intermediate. Well, it's down $1.52. I stand corrected. It moves. Brent crude under $70 a barrel. American oil 66.46. That's a wow statistic this morning. The dollar weaker, DXY hammered down to a 104 level. I got green on the screen, but I'm not going to sell it to you too hard. The Dow up 157, SPX up 15 points. There is an exceptionally important Supreme Court decision this morning, and we are so honored to bring you Nick Ackerman. I can't say enough about his public service to the nation. He's been around the block to, like, public service to the nation during Watergate, and of course is many years in prosecution and law with Parchman from Harvard, I should say, along the way. Nick, we are honored you're with us today. The president must be upset at this Supreme Court decision where they reject President Trump on USAID foreign aid freeze. And what's important here in a close vote is John Roberts and Amy Coney Barrett joined the liberals against Alito, Thomas, Gorsuch, and Kavanaugh. Did you expect this partition of Trump conservatives on the court?
Kind of been expecting it. I mean, Amy Coney Barrett and John Roberts have gone off on their own on several items. I would have thought that Kavanaugh would have gone along with this too. I mean, he does have an opinion from the days he was on the DC circuit, making it pretty clear that when you get down to Article 1 powers, that is the power of the purse that Congress has to disperse money, separate from the executive branch, which is Section 2 of the Constitution, who has to carry out those orders from the Congress. And this was a pretty significant decision because there are a lot of decisions, court cases out there now contesting the idea that the Trump administration can simply not pay certain monies, doesn't have to disperse the funds.
Right.
But keep in mind that this one really related to monies that were already owed on certain contracts that have already been performed. So the question is, how does this going to relate to other situations where the contracts have not yet been performed and they're holding back money? I kind of think the principle is the same, but we'll have to see.
Greg Storr at Bloomberg, expert on this, would go into the complexities with you. I'll keep it simple. There seems to be, whatever anybody's politics, a statement that the legislative branch of the United States of America is missing in action. Is this the kind of court case that could be a clarion call to Capitol Hill to get their act together?
Absolutely. I mean, this ought to make them realize that they are just giving up their powers. They're ceding their powers to Donald Trump. They might as well not even show up for work. What's the point if what they wind up appropriating and what they wind up passing can just be ignored by the president? Makes no sense. Yeah, I think this ought to get some people off their duffs.
Does this essentially clear the way for lower courts to continue proceedings in the dispute?
Sure. I mean, this is the lower court will continue. They'll be looking at other situations like this. I think the litigants there will be bringing up other situations where money is being withheld. But I think this kind of gives the green light to the district courts all across the country that are considering other aspects of this same issue, how to come out on this.
So what do you think next is in the timeline as all of this unfolds?
Well, I got to tell you, it's very hard to be able to predict that. There are now over 95 cases, lawsuits that have been filed across the United States that relate to the firings of government employees, that relate to monies being withheld. It is very hard without a giant scorecard and to know exactly where every case is at any particular time to know what's going to be next. All I can say is buckle your seatbelts. Things are going to be happening, and they're going to be happening more quickly over the next couple weeks.
I brought Whizzer White up the other day, the wonderful gentleman from Colorado, acclaimed athlete, and he was supposed to be this kind of judge, and he wasn't. And then there's Thurgood Marshall, who I think we could all say was predicted to be a certain kind of judge, and he was. And then Nick Ackerman, it gets a little confusing. John Paul Stevens, maybe there's a mystery there as well. Certainly the great moderate Anthony Kennedy. Can you identify the complexities of this 9-seat Supreme Court? Can you do that, or is it as stark as the media makes it?
I don't think it's as stark as the media makes it. First of all, you've got John Roberts, who is a traditionalist. And I think if there's anybody who's going to stand up for the difference between Article 1 and Article 2 in the U.S. Constitution, he's the guy to do it. Amy Coney Barrett, turns out she is a very thoughtful, independent justice. She is not going the way of the others on many issues. I thought on some things, for example, that issue that came up during the summer, well, there's a couple of issues. One on the immunity decision, she took a different tact in terms of she would have held that certain evidence would be admissible, even if the president had immunity in certain situations, which would have contradicted a good part of the Roberts opinion. She also came out on that obstruction charge that was used with the January 6th defendants, and was one of the few people on that court, including even the liberals, that recognize that obstruction has been around for a long time. It started out with the courts, but this was something long in the coming, to be able to, actually broaden it to include Congress. So she's an independent thinker. I think she's one of those people that will stand up for the Constitution.
Nick Ackerman, stay with us, folks. Mr. Ackerman with us this morning with his efforts for the nation as Assistant Special Watergate Prosecutor and, of course, decades of experience in the law of the land. I think this needs to be said, Jess Menton, because we lose track. Chief Justice John Roberts, 19 and a half years on the Supreme Court. Alito, the conservative, 19 years on the Supreme Court. I'd stunned at this statistic. Sotomayor and Kagan, already 15 years and 14 years. Time flies by.
Right, Alito and Roberts, both appointed by former President George W. Bush there. But I was actually going through and looking at this brief that was filed on Friday from the Supreme Court, and they were talking about it, even if the government won, the brief said the administration would not be able to proceed with the funding freeze. Why would that be?
Oh, there's no good reason for that. They can unfreeze that. Of course they can do that. It may take a couple days more. There may be some bureaucratic loopholes to jump through, but no, they can do that. A couple phone calls. I mean, that is absolutely insane.
Yeah, I look, Nick, and to get one more question here, we've got to go back to the markets as well. What's in store? Like every legal action that we report, that Anne-Marie Horton and Joe Matthew and Katie Lyons talk about, do you just assume they're all going to end up in the Supreme Court?
Well, I think the big items will. This is a huge constitutional principle about who has the power of the purse and what the executive's job is. It's basically to faithfully execute the laws that Congress passes. So, yes, I mean, I think you're going to find certain matters going to the Supreme Court like this that will give some clarity and pushback. But I think there's going to be a real tendency here with so many lawsuits out there to sit back, let the lower courts deal with these issues.
Nick Ackerman, thank you so much for giving us perspective today. Nick Ackerman there on a Supreme Court decision of 5-4 against the President of the United States. We'll have much more on that through the day. And of course, always looking to June Grasso for truly expert opinion here on Bloomberg Radio. We say good morning out on YouTube. Subscribe to Bloomberg Podcast, building each and every day. Thank you so much for the interest, given the tumult that's out there. Equities can't make up their mind. I mean, Jess Menton, when I look at equities, I'm like, I don't know.
You know, I mean, they're bouncing around the flat line here, but I will point out that Wednesdays have been the best day for the S&P 500 this year on an annualized basis, close to 80% gain there. But of course, only 2 months into the new year.
You didn't get the memo. We don't do annualized basis on Wednesday. We save that for Thursday. Right now, I need some news here. The Bloomberg Business Flash from Interactive Brokers, of course, with Lisa Mateo.
You got it. We have stocks trying to battle back after yesterday's sell-off. More data points to that slowdown in business hiring. ADP says private sector payrolls rose by 77,000 in February. That was actually the smallest increase since July. Most of those job cuts were in service industries. It comes ahead, yes, of Friday's government jobs report. We have more data coming in now. S&P Global Services PMI, that's for February. The survey was for 49.7, came in a bit higher at 51 even. About 10 minutes from now, factory durable goods orders and ISM services index. So let's get to the markets. The NASDAQ, little change, down about 14 points. The Dow up 0.3%, 152 points. The S&P 500 up 0.1%. Or 5 points. The 2-year yield, 3.90%. That's up down 8 basis points. And the yield on the 10-year, 4.19%. And that's down 4 basis points. We have the Bloomberg Dollar Spot Index down about 0.8%. Quick check of earnings. We have shares of Abercrombie & Fitch really taking a hit. Abercrombie & Fitch down 16%. Its growth outlook trailed estimates. Then we go to shares of Adidas. They're falling. They're off about 1%. In Frankfurt, it said its earnings are grow slower this year than investors expected. And that was despite those retro sneakers being really popular. And then finally, Foot Locker. Weaker consumer demand, shift toward shoppers looking for deals. That really hurt performance. But its shares are higher this morning. They're up about 5%. After the close, we move on to Victoria's Secret and Marvell Technology. That is your Bloomberg Business Flash. Jess and Tom.
Lisa, thank you so much. Greatly appreciate it. Finally, we look, and you heard earlier the lecture that I got from Belski that bonds matter. Ira Jersey joins us now, expert in this area. Just Ira, in the interior market inside 2-year yield, is the system sound? Is the trust market of commercial paper, overnight repos and the rest, is it sound right now?
Well, there's not much in the way of commercial paper at all, so I would say that it's sound from a credit perspective. You know, the companies have termed out a lot of their debt. When it comes to the funding markets, right, so where you talked about the repo market and by extension things like treasury bills, those have been pretty, reasonably stable in terms of that funding is okay at the moment. Now, part of the reason for that is there's been an uptick in bank reserves and in use of the Federal Reserve's reverse repo facility because of all the stuff going on with the debt ceiling. So the government, the Treasury Department, the government is actually paying down a lot of its cash, and that ends up in bank reserves and bank deposits. So there's plenty of liquidity out there right now. That will change once the debt limit is raised. When that happens is still a matter of conjecture. So that's something that we have to watch because it could shift very quickly within a matter of a few days.
Household cash, not the buffer it used to be. Though, since I cover equities, I know that asset allocation toward the equity market is close to records here when it comes to households throughout America. So how do we sort of quantify the two, especially as more investors and Americans are investing in the stock market?
So if you mean just the, households don't typically buy treasuries, right? They buy them indirectly through things like life insurance policies or pension funds, and maybe some kind of asset allocation fund, right? So if you get into an age-based mutual fund or ETF, that will have a small allocation when you're younger, and then it will grow its fixed income allocation as you get older. But households typically don't buy bonds, right? They do buy stocks, they do buy equity ETFs. RIAs, so registered investment advisors, they'll often put some people into say a bond ETF. But it's not a conscious decision, right? Bonds are boring. People don't understand them. They think they're very mathy. They're not as mathy as people think, but they certainly are, part of our portfolio, because as you've seen over the last few days, bonds tend to rally, at least often, when the equity market isn't doing well. So there is some balance and what people call ballast there in terms of an overall portfolio and how you can limit your overall portfolio's risk-adjusted returns by just having some bonds as well as equities.
You're betting that Treasury rally may continue here, but there are limits. What are those?
Yeah, so I think the single biggest limit is with tariffs coming online, what does that do to inflation expectations? So while we think 10-year treasuries might break down below 4% at some point, we do think that it probably won't go below the recent yield lows in terms of the 10-year yield. 2-year yields, however, I think can rally significantly further, because if you have this weird dynamic where we are in a stagflationary environment where you have prices going up because of tariffs and because of other geopolitical concerns, but the job market slows significantly, the economy slows, and the Federal Reserve cuts interest rates more quickly than we have been pricing. And we are now pricing for 3 interest rate cuts this year from basically almost 0 not so long ago. Then that means that you get a much steeper yield curve. So 2-year yields go down much faster than 10-year yields.
We have a solid 3 rate cut call right now.
Well, the market is pricing that. My call is actually for the Federal Reserve to wait some pretty long period of time, because they need to firstly see 1 or 2, 2 or 3 probably relatively weak non-farm payroll prints. If we continue to get what the market expectation is, the median expectation of 170,000 jobs every month, that's fine. That's more than the replacement rate. Right. The Fed will be like, okay, that's not a bad situation. You get a couple of sub-100s, that's a different story. That's when the Fed starts to say, okay, maybe it's time to start easing again.
I'm looking at Aston Villa IRA jersey, DLDDWL. What happened? They're in 10th place.
Yeah, so Aston Villa does not have a particularly deep bench. They got helped a little bit with some of the January signings like Marcus Rashford and Asensio, but we're in a lot of competition. So we advanced in the FA Cup, where we now have a 2-goal lead in the Champions League from a match yesterday. It's hard for us to play these 2-game-a-week weeks and still have good performances in the league.
See how his voice changes?
No, have you seen his suspenders with the soccer balls on
they're
them?
sick.
Oh,
yeah.
I love them.
The only reason we have
great.
him on is to get us World Cup tickets. He's our only chance to get in the MetLife. Ira Jersey, thank you so much on the bond market. We're watching that. I'm watching the Sweeney yield, 3.89% in the 2-year yield. And I really want to make it clear, we had green on the screen post joint session speech, and it's faded away here with a difficult ADP report. Red and green on the screen now. The VIX out a big stick, wow, 24.74. There are some market moving moments, and Alex and Paul will have some key economic data for you here to drive the discussion. For Jess, you going to do this again? I mean, you survived.
I did. I survived. I guess let me know next time you want me to.
It was good to see A&M take a big victory.
Yeah, there we go. It's been a good week. You wore your Texas A&M bow tie yesterday?
Yeah, I wore my Robert McTeer bow tie.
We can do it again soon.
It's good to see. Do you sleep?
Not much.
What are you publishing today?
Actually, it's that correlation story I was telling you about. How
you've been beating that to death all morning.
I know. I got it early so I could finish that one, so that my bosses could edit it while I was.
Do you do a Zoom meeting to come up with your story? I mean, are you very Zoomy?
No. I report, Tom. I talk to my sources about what they're watching.
See how the voice changed there, Lisa? I mean, just gave us a major shade. Well, do you look at the S&P or the Dow Jones Industrial Average?
Both, but they're different
That's
markets.
The right answer.
They're both.
Yes.
I mean, you've got a price-weighted index versus a market cap-weighted index. So thank you. I passed there.
Jess Menton, thank you so much for joining us for the last couple of days. I believe Paul Sweeney will be back tomorrow. Although, he takes off Friday as it gets warmer. So
especially you get ready for those summertime Fridays.
Stretches it out Thursday. I don't know. When we see Paul, we may not. We'll have to see on that. Paul Sweeney and Alex Steele at the Bloomberg Invest Conference here, day 2. A big success. I talked to Ted from Connecticut yesterday, and he said he attended, and it was a big success. In Ira Jersey's yield space, again, 3.89% on the 2-year yield. Only to get Jess in here, we had to play ZZ Top in honor of Dusty Hill of College Station, Texas. We're playing early ZZ. It's different than later ZZ. Good morning.